Afternoon. How are we all doing? Afternoon, Brian. Konnichiwa. Putting my hands in front of me and bowing as we speak. Afternoon, Clips. Afternoon, Diamond. Is my mic okay, or am I a little bit too boomy and loud? Seems to have a bit of a high pickup. I might move my mic away a little bit. Don't want to deafen everybody. Deafening enough as it is. Afternoon, Jonathan. Not a lot happened today so far. I spent 4 hours streaming this morning, talking about nothing. The market didn't go anywhere. Mainly talking about car crashes. Went through the entire boot camp. Usual stuff. Afternoon, George. I'm just about to start some YouTube advertising. Hey, look at me becoming a YouTube advertiser. I thought I'd spend 20 quid a day pushing some adverts onto YouTube, so I'm going to get some ads done. Obviously not selling anything, just promoting the live room and stuff, and the course, the YouTube channel. Thought it might be a bit of fun. See if we can get some more people in here. There's only 20 here. No one ever comes in the New York session. No one likes the New York session. Afternoon, George. Afternoon, Gerard. Afternoon, Brian. Konnichiwa. You've already said that. Ah, hello. Right. So there's no news until FOMC. It's going to be a very quiet session. FOMC's later. We've had a little bit of news on oil. OPEC is expected to stick to its plan to cut oil output by 2 million barrels per day throughout the end of 2023. So oil had a little bit of a spike off of that this morning. I say didn't really have much of a spike, but it has rallied a little bit, but nothing dramatic. We've gone straight up into that resistance, which is the old H4 level that we were looking to act as support. So are we going to do another leg down, or are we going to get to where I expect to get, which is up there? We will see. But yeah, some fairly decent movement on that so far this morning, but nothing else much has moved. I say so far. It's at an hour up. That's it. Not an awful lot. So if we scan through quickly the London session, which is the orange block here, you can see that all we've done really is pulled back on Asia there. Not really any movement there, not really any movement there, not really any movement there. It's pretty much the same story across the board. Everything is flat, everything's within the Asian range or just reversing the Asian range. The only thing we've had any real movement on, so Euro, for example, we opened there, we pushed down, we pushed back, we're back at the beginning. So nothing's gone anywhere. So the only thing we've had any movement on really is the pound pairs, and they're all reversing. So big push, obviously, on the CPI figures, to say big push. We haven't even hit ADR. ADRs are flat, nothing there. So yeah, nothing's moved. Everything has been reverting. So yeah, don't really know what to make of today. It's dull. But this is FOMC day. Yeah, nothing ever moves on FOMC day, does it? Market really has no inkling as to which way to go, and it doesn't want to go anywhere. So everything is sideways. So really don't know what to suggest this afternoon. Afternoon, Derp. Yarp. We're going to watch the open, then NASDAQ. We'll have a look at the Dow. We'll see if we can make any money out of that. DAX is very boring. Yeah, the DAX has gone sideways up at this high. So the DAX basically pushed out of the high. We're up in this propulsion gap. So this is the intervention. Not the intervention. The Credit Suisse debacle. Obviously, we had on Friday, we had, or Thursday, Friday, we had SVB, and then we had Credit Suisse. So this was the safe haven run, which obviously draws all the money out of the stock market to pay for it. Now Credit Suisse is sorted. We're back to origin. So I still fancy that gap fill. The question is, are we going to come back up back here first, or do that. So the DAX has just pushed out those highs and stalled, really, so not really done much at all today. Opening range break was actually pretty good in the end. We had a whippy open, so we had probably, depending on which opening range you took, you had a couple of stop outs at least, and then a nice push. So there was actually a very nice profitable opening range break. It just was a late one. So if you had 2 stop outs there for $1,000, which were 30 odd pips or something like that, you had a run up in 90. So you had a 3-to-1. So you would have made money on that this morning, but depending on your stop, and if you were using an ADR range bound stop, you probably would have got stopped out on these. So I don't think it was very good today. I didn't trade it today. So, and the same for the NASDAQ. I'm not trading the NASDAQ on my accounts either this afternoon. I will watch it, but I'm not actually going to take it because I've got a feeling we may get a whippy one. We'll see. But the NASDAQ, we are very high. So very high. We're very close to the Globex high at the moment. So obviously this is today. That's yesterday's high after the rally. Globex has pulled back down and pushing back up again. So there, we've got a good chance of getting a reaction. However, I suspect we will probably just muck about within this range somewhere. So I would look to sell the highs today and buy the lows. I'm not sure that the opening range breakout is the right strategy today. So just be careful. You will get a strong move at the open. But wide stops, I think, is probably a good idea today. We've got 3 minutes to go to the open. Dorpen is Dortmund. Yeah, but it also sounds like Yarp. You're going to be Yarp. You're Yarp. You're just Yarp now. Accept it. Narp. I got flagged for that. Remember when I first said that and I showed that little clip of Hot Fuzz? YouTube flagged that video for copyright infringement. So I had to snip out that bit of Hot Fuzz. Well, I didn't. It snipped out the Hot Fuzz bit because it was a copyright infringement. I've got to be very careful what videos I show on YouTube whenever I do. The most uneventful red folder week that I can remember. Yeah, wait a minute. We've only had one red folder. We've only had the CAD CPI, and that was crap. That's crap as well. That's going the wrong way. That's why that's bad. Doesn't matter how much you go up on inflation, the rest of the world knows that that is not good for the pound. So these are the biggies. This is it. So this is CPI. CPI is a precursor to what they do with inflation. Inflation is where it's at. So this is the first proper red flag today. And then obviously the Swiss franc tomorrow and the pound. So this is where the movement's going to happen. Hopefully. We got 1.5 minutes till the open. We are testing this pre-market. Actually, that's not pre-market high, is it? Sorry. Testing that level there. You finding us a dozen trades to get into before the big bang so we can all be rich? Yeah, we can do that. We'll have a look at everything today. And look at some ideas you can basically play off of FOMC, but everything's going to be risky. We'll have a look. I'll tell you what we'll do. We'll have a look at previous FOMCs. We'll do a little bit of research, a little bit of analysis. Afternoon, Ratib. Gold. Is that a joke? Brian, incoming. Incoming. Yes. Gold. It's going to go up or down, depending on whether the US goes up or down. There you go. There's your analysis on gold. Aussie dollar Swiss. We'll have a look at that in a sec. I'll have a look at that now, actually. Quickly. Because this isn't going to be affected as much by the US dollar. At the moment, we're mid-range on the RSI. I've just got out of a long on that from yesterday. That's it, really. If this market structure break is going to hold and we are going to go bearish market structure, this is where you want to be shorting it. because we've just pulled back up into that previous low before the high, which will act as resistance all the way down. There's your opening range pre-market. It's popped its head out the high, and now it's popping its head back down again. So yeah, I like this as a, if you look at this area here, so potentially new low, so high, low, lower high, lower low. However, we've got a whacking great propulsion gap up there. So up to that first, maybe, and then back down again. Don't know, tricky one. Aussie dollar Swiss, but there's no advantage on it. 4 hour, hourly and 4 hourly RSIs in the center, so there's no extensions really to get into. So whether you take it here, it's got a 50-50 chance of going up and down really. I would say it's more likely they're going to come up and sort that, but it could also do a new leg down and then come up there. Difficult to tell. Okay, so US dollar, NASDAQ. Very, very, very wicky today. Very wicky. As expected. I think your only hope today is a 5-minute opening range break. That they take a run for the high of the day, which is yesterday's high, which is not far away at all. Why haven't I got that on there? So that's yesterday's high. That is Globex high. Yeah, so you run up to there, you run down to Globex low. And yesterday's low. I mean, the chances of it getting anywhere near an ADR ahead of FOMC is I don't know. I just can't see it today. I can't see us getting anywhere. So just be careful. Wait. Be patient. Don't jump in. We are waiting for EuroCAD to go down. Why are you waiting for EuroCAD to go down? Oh yeah, I'm waiting for EuroCAD to go down as well. Yes. Waiting. Again, this is going to happen in FOMC because it's CAD related to US movement. So hoping for a strong US dollar, basically. Be lovely if they came out and said, actually, we decided to go to 5.25. Off goes the US dollar. Come on, 61 people, 64 people, in fact, and 11 likes. Let's hit the button, boys and girls. I was doing my little analysis on YouTube yesterday because I was just curious where everything comes from, all the traffic comes from. We have an awful lot of Indians in here and 11% female, which I found quite interesting. It's very male-dominated trading for some unknown reason. There's very few female traders. There's Sarah Strat Sniper. She's obviously a female trader. But apart from that, I can't really put my finger on many female traders at all. And there's obviously a reason why Sarah Strat Sniper is popular. And I don't think it's got anything to do with her trading. Although she is very good. Afternoon, Kakvi the world. I really wish people would put their proper names down because it's very hard to actually say a lot of this stuff. So we're at the lows. I shouldn't say that about Sarah. She's just, quite attractive. When you're comparing other traders that are on YouTube, there's not a lot of comparison, is there, really? Right. So, Mr. Wick is officially in the building as suspected. That is what he's doing. That is what he's likely to end up with. A pair of Crocs on his feet that aren't Crocs. Okay, so there's your 5-minute opening range. We are well within it. So it's going to take a pretty decent move to get out of this. Let's just turn the crickets on and see if we've got any volume. I don't think there is. In fact, I can see there's not really, but we'll listen out and see if we can hear any volume anyway. If there's any pairs anybody wants to look at, obviously let me know, but any analysis this afternoon really is going to be warped by FOMC anyway. So thanks for the follow. Can't say your name. Beringer. Eliza. I'm going to call you Eliza. That's probably Eliza, isn't it? Thanks for the follow. Welcome aboard. No volume. Let me just refresh this just in case it is my feed, but I got a feeling it's Tick Strike. There is nobody buying or selling today. Check my volumes on. Just checking everything because it doesn't seem to be anybody buying or selling in the market. CACV. Sorry, it's just an old YouTube profile that I used back in the day. The username was part of an old Call of Duty clan called CAC. Oh, here we go. Buyers. South Park World of Warcraft episode is what I envision. What? That was it. We are going out the highs by the look of things. Fairly bullish. Okay, so opening range break to the high by the looks of things. So, you know, upside targets. Not a lot, is there? So there you go. That's not actually broken out yet. Just retesting the initial 5-minute range. With spread, you're probably taken in long now. So it's long breakout. It's not fun, is it? Not fun. So well, I'll keep an eye on that, but we'll see. Because we were all absolutely cack at playing Call of Duty. Good name. I was in a Medal of Honor clan. That shows you how old I am. Yeah, when the original Medal of Honor came out in the 20 years ago, something. I played in a clan for Medal of Honor when we first started doing like clan games, organized clans. I was in a clan for Medal of Honor. And we used to practice. And this is how serious we were. We used to train 4 times a week for 2 hours. Yeah. So I can't remember what days it was. It was like Mondays, Wednesdays, and Fridays. For 2 hours in the evenings, we would all get together and we would train. We would go through every map, and we had run-throughs on every map where we would just go vroom, 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 and fly through the maps. And then we played friendlies, and then we had usually a friendly on a Saturday for 2 hours where we play another clan. And then obviously we played in tournaments. So literally, my wife was not very impressed with my Call of Duty clan days because I literally came home from work and did nothing but play Call of Duty. Actually, my Medal of Honor. And then Call of Duty came out and obviously took over. But that wasn't on a BBC Micro, no, that was on a PC. But on a graphics card, probably with about 2 gig of RAM, maybe. No, wouldn't have been about that much. 512 meg, probably. Original Medal of Honor. There was one called Silo. And this was the map. This map on Medal of Honor. Oh, it was classic. Missile silo it was. I can't remember. No, that's Medal of Honor Airborne. This is way before that. The original Medal of Honor. What is it called? Missile. No, 2010. No, it's way before that. We're talking 90s stuff. No, YouTube, Google doesn't go back as far. Doesn't go back far enough. When I was competitively playing computer games. It says your 15-minute opening range. Oh, sorry. This is sorry. That's your 10. This is the 15-minute opening range high. It's not going to get anywhere today, is it? Sellers are starting to come in, push down now. Let's not talk about age because I can still remember playing Paperboy. I can remember playing Paperboy on the BBC Micro as well. I've got Paperboy. I've got one of those arcade console things that you buy. I got one of these. These. Brilliant. I got one of these at home. It's got every arcade game you ever remember in the world in there. It's got Paperboy. It's got Mortal Kombat. It's got Bubble Bobble. Everything you ever played in an arcade as a kid. Pac-Man, obviously Space Invaders. It's got all of the old Atari stuff, like Joust and everything you could ever remember playing as a child is contained inside this thing with joysticks. It's the best thing I ever bought in my life. I spent hours reliving my childhood and then realized that, oh my God, it was so boring after a while. But get one of these, $160, 160 quid. Brilliant. Everything you could ever want. There's loads of them, all different prices, but you need 150 quid, 200 quid. You can also get them in cabinets as well. They build it into a cabinet for you. Obviously, that's much more fun, but much more expensive to get them built into a cabinet. But awesome. Anyway, right. How are we doing here? Not really doing anything, are we? As I suspected. So if there's anything anybody wants to look at, let me know. We'll do some analysis on FX pairs, but there's no ADRs to look at. Nothing's moved far enough today. RSIs, there's nothing to look at that's any different from this morning. So the only things we've got extended are things like the Euro Yen, which is starting to come down. I'm already in that one. Euro US dollar, not really gone anywhere. Pound yen, we looked at that one this morning. That's coming down nicely, so I might get a profit out of that this afternoon. New Zealand dollar yen, extended. It's already started to come down, and obviously US dollar yen. It's not going to go very far today. Swiss yen as well. Again, all RSI extensions, all starting to come down on the hourlies. The 4 hourlies are the same as this morning. Euro CAD, extended to the upside. Pound CAD, extended to the upside. So 4 positions now on pound CAD. Average is now just above 150 ADR. So any strength on the US dollar this afternoon, and I'm out of that this evening. Just waiting, but there's nothing moving. So can't bank anything on days like this. Let's have a quick look at the Dow, what the Dow's up to. I would imagine very similar to, oh no, oh, blimey, look at that. So this is your 15-minute opening range. So there is your 5-minute opening range on the Dow. The Dow has literally just popped its head out the lows, whereas the Nasdaq's just popped its head out the highs. So again, we've got divergence on the Nasdaq Dow, one long, one short. Nothing exciting. Suppose you would trade without considering the new stuff using the position strategy. How much percentage would it increase having to do drawdown control? Not sure what you mean. Suppose you would trade without considering the new stuff using position trading. Position trading doesn't take news into account. You get in when you get in. News just moves the market. If you get into a trade and news moves the market, everybody that's made that happen will need to get out of that move. So all a news move typically is a pullback afterwards. The only time you ever get stuck is if you've got a situation like we had with the Swiss franc, where they decide to actually change the fundamentals without telling anybody, which was there, I think. So that sort of thing. Actually, it's not there. It's further back. That was there. So this is the Swiss National Bank deciding actually we're going to increase our interest rates, not leave them as they are. Yeah, so that sort of movement. There's nothing you can do about that. You will just scale out of it fast and hard and get hurt. But I don't pay any attention to actual news events. When you're in a position, you're in a position. If it goes against you, you add. If it doesn't, you get out. There's not a lot really you can do. Look at this thing. Shocking. Shocking. We'll see if we get a half an hour breakout. So there's your 15-minute opening range, the blue lines. There's just nothing, is there? It's dead. It's totally dead. I'm still on PS1, Brian. Oh, good old PS1. I saw one of those the other day in CEX, which is a shop in the UK where people take their old stuff and trade it in. They were selling it for over £500. It was a pretty mint one, but it was PS1. 500 quid. Like, what? Because there's not many of them about, I suppose. And not a lot of them work. They're probably all broken now. Tamo, does New York stock market open at 1:30 UK time? Yes, at the moment it does, but it will be 2:30 next week. Clocks change in the UK on Sunday. So as of next week, I will be on at 2:20 UK, not 1:20, because we'll be another hour ahead. So we have this period of 2 weeks a year where we go out of sync, and then we have another week when we go out of sync, when we change them back again. Hopefully at some point they decide to stop doing it. But is there any entry from now, Pascal? On what? What are you just talking in general? If you're talking in general, I would just concentrate on these, but you've missed them, really. All the ends. But you've kind of missed them. The entries were this morning. Although I still don't think these are going to get very far today. I think you'll struggle to get anywhere today with the FOMC. Buyers coming back in now, look. Okay, we're running the highs. Let's see if we get absorbed at the highs. Okay, we are getting out the highs, so straight up into resistance. So you've got this area here. I'll be watching for wicks. Not going anywhere, is it, today? If you look at this on the 1 minute chart, what's happening here on the 1 minute chart? I haven't got my futures software open, but where's the open there? So there's your open. So what you've got happening basically is basically what's called a value area high and low buy, or value area high sell and a value area low buy. So all it's doing, if you look at a volume profile since the open, the volume profile will look like that. And what they're doing is basically every time you go to this area, which is the value area high, they sell it. And every time you enter into this area, which is the value area low, they buy it. Yeah, and the idea will be to go into what's called a rotation day, where you just get something looking like that, which will build over the day, and this bit in the middle will just get bigger and bigger and bigger and bigger. But at the end of the day, it will all end like that. And you just sell the highs and buy the lows, and the range gets wider and wider. So it's, from a scalping perspective, it's very difficult to trade because you never know where the value area high is going to end, and you never know where a breakout is going to occur to cause a new value area. And then they'll put it back into here, and then they'll try and get out the lows, and they'll fail, and they'll put it back into there, and they'll try and get out the highs. And that's why you see the market go into rotation. So this is price discovery. Can we trade beyond that high? Let's see if there's limit orders triggering there. If there are, it'll push back down, and then they'll go and try a low and see if how far they can get out of there. Or it's going to prove me completely wrong, and we're just going to go for a complete breakout this morning, this afternoon. Could happen. You never know. You never know. But that certainly looks like a value area sell, doesn't it? Meh. So if you're going to trade something like this, you need John Wick. So literally every wick you get, the problem with this style of trading is every wick you get, by the time you've identified the wick, you have missed that much of the move. So you want to get in and out with one-to-one risk reward and hope you get more than a 50% strike rate. That's the best way to make money when we're going into rotation. So that could be a value area low, or that could be a value area low, but you won't know until you get there. So if you buy that when it starts to wick, stop there. If you buy it when it starts to wick there, stop there. Let's play it back and forth, back and forth. But it's not, for me, it's very, very, very difficult to make money doing that. So nobody's got any pairs they want to look at. Right. Well, what else should we do then? Because the market's not going to move this afternoon because the there are nobody interested in buying or selling ahead of FOMC. Afternoon, Alan. So does anybody want to do anything? Any look at strategy? Any bits of the bootcamp they want clarification on? Anything they want to discuss trading wise? Any strategies? Anything at all that I may know about? Obviously. Could you do an analysis on an Aussie US on the hourly chart? I can do that. So Aussie US. Ooh. Let's refresh. Oh, I don't want to refresh COT data. Whoops. I want to look at the sentiment. So Aussie US is a massive sell. Well, it's not. It's a bit of a sell at the minute. COT a short. Retail are short. Fundamentals are mixed at the moment. So I'll be looking more for shorts than longs. So at the minute, we've just pulled straight back up into that propulsion gap here. Yeah, so that's rejected nicely. So this is where the sell move started. This was US dollar strength, safe haven run based on the actually the SVB. Was that SVB? Where are we? No, Swiss was last week, wasn't it? So yeah, this was probably a news run, wasn't it? On the US dollar. So we've pushed back up into resistance into this area. They've sold it again and again and again. So I'll be looking for shorts on it because we can't get through that area of resistance. So targets to the downside, that's kind of filled really. So the only downside target you've got is 175 ADR. So we're looking for shorts. So drop down to M5. Your reversal alert was this morning. There was your retest. So yeah, you've missed it. But look at how far it's gone in London. And that's Asia. So we're within the Asian range in London. Nothing's going anywhere, you know. Analysis right now is useless because at 6 o'clock, this thing's going to either go that way or that way with a huge push. So it'll go either direction. There we go. So we've rejected that high. Chinese looking name, which I can't pronounce. The dot-com bubble and subprime will come together in the future. Okay. The dot-com bubble? You've missed that one. It was 20 years ago, mate. We've had the dot-com bubble and we've had subprime. They're historical events. This is the COVID recovery, this will be known as. Or the COVID collapse, more likely. Oh, here come the buyers. Enticing the buyers in. Stops go under there. Limit orders trigger there. Run over the buyers. That's my prediction. Oil. We looked at oil this morning. Oil's just run straight up into the resistance, which is our old 4-hour level here. So that's where we are at the moment. Looking for it to come back up into this blue area here, which is the, when we break this high, that is your next area of resistance. Yeah, somewhere in there, which would be another pullback into the 24.72 zone. So at the minute, we're not going anywhere, obviously, because it's FOMC day, but this is what I'm looking at. Look at my fibs on here from this morning, look. So this is what I'm looking for, is either a pullback into this propulsion gap. Well, this is what I was looking for this morning, a pullback into that propulsion gap and a bounce there up into there, or a deep pullback into the 61.872 area, which is that previous daily support that we bounced out of. Then we stop run it, wick off spring, then we push up, accumulate and go. So it's either going to do that, or we're just going to break and go. But this is going to happen in FOMC. So right now, there's no point in looking at it. We have got 230. There is a potential that this might move at 230 this afternoon because we've got the crude inventories, which is always at the same time every Wednesday. Will be 3:30 next week for me anyway. But we've got crude oil inventories coming out at 2:30, so we might find we get that move on oil happening this afternoon. But I wouldn't bank on it ahead of FOMC. So we're definitely coming back up into here. But it's whether or not it's going to go that way first or that way. So I'd much prefer, obviously, that. I mean, much easier. But that's oil. David, got on the Aussie New Zealand with half ADR stop loss.
Thanks for the follow.
Thanks for the follow, Phil. Welcome aboard. Phil Aliu Jr. Aussie New Zealand. Yep. From yesterday. I didn't get that. But yeah, lovely. Resistance bounce back down into there somewhere. Breezy F, gold. Thank you, Fab. Short. Short it. Or long it. Up to you. The question is, and what you need to do is consult your crystal ball on gold, and you need to let the ball tell you whether or not the FOMC figure this evening will be a 5, a 4.75, or a 5.25. And then after you get that result, you need to ask it, will the Fed be hawkish or not? If so, US dollar will go up or down, and then gold will go the opposite way to the US dollar because it's just a US dollar cross. That is my analysis on gold and pretty much everything at the moment. There we go. What did I say? Here come the bulls. Entice everybody to go long. Everybody's stops are now sitting under there in the futures market. Yeah. Hit your limit orders up at the high. Drive price back down and get their orders to exit your positions. Watch, watch, watch. It's a classic value area high sell. This is how you trade futures. Magic 8 ball. Yep. Magic 8 ball. God, when did you do that? Is there an online one? No, that's where you buy them from, isn't it? Oh, yeah, here you go. Oh, go away. Here we go. My reply is no. Oh, dang. US dollar's coming down. So buy gold. Buy gold. US dollar is coming down this afternoon, this evening. You heard it here first. There we go. So US dollar shorts. Buy gold. Magic 8 Ball knows everything. Derp, please tell about setting the reversal EA, but not too fast. Position trading H1M5. I can't not do it fast. I can't not do it fast. There's a 2.5 hour video on the website about setting up the market reversal alerts EA. Right, but I will go through H1M5 for you as slow as I can. Right, so this is the market reversal alerts EA. So you need to set, remember this, 45 minutes into the session. I'm going through this, okay? If you want to watch the replay, 45 minutes. So basically, first thing to do is set a magic number. Make sure that is a unique magic number for long and for short. The risk that I use is a percentage of my balance, and I use 0.25%. Yeah. And my stop loss calculation is made on ADR. I do not use a take profit. I use a stop loss only. I'm risking, where's ADR gone? I'm risking half an ADR. Yeah, 0.25% of my account over half an ADR. So when we get a reversal alert, yeah, it puts a stop loss half an ADR away from my entry. and it risks 0.25 of my account balance if price moves half an ADR. So if I get an ADR push against me, which is 1 ADR, worst case scenario, I'm 0.5% in drawdown on my account. Yeah. Here comes the buyers. So that's it on risk. The only filter being used is the higher time frame RSI filter. Yeah, that's set to true using the 1 hour time frame. I am using the 14 RSI median, and I am using 75 as the high level and 25 as the low level. So I use 75, 25. So on the dash, I'm using this column here. That is where I start looking for entries on that column. That's it for that bit. Scrolling down, I don't use a trailing stop. I use basket trading, and I use a 1.3 lot size multiplier. So basically, if I got in with my first position being 1 contract, position 2 would be 1.3, and so on and so forth. Every position has to be a ADR apart. So if I get in here, for example, on gold, the next position has to be 150 ADR away. Well, 1 ADR movement, because we're roughly 50% of ADR here. So it has to be that far away. So my spacing of my positions, because it's hourly, not 4 hourly, is 1 ADR apart. So the next reversal alert I will get in will be there. And then when price pushes down, I get out. My exits, because this is a 100K account, are when we reach $500, 0.5%, or half an ADR in profit. So if the market goes up and comes straight down, 1 entry, it will get me out at half an ADR, which is about $300. Yeah. If there's 2 positions on, what I normally hit first is my $500, because I've got 2 positions on, and it normally gets to a $500 profit before it will get to a half an ADR movement. Yeah. So that's why those 2 are set. You don't have to use that, but I like to use that, because if I've got 2 positions on, what I don't want to do is wait for half an ADR in profit in my direction. I'd rather just get out when I've got 500, especially if you've got 3 or 4 positions. That one up there is going to be a much higher lot size than that one. So to get $500 in profit, you probably only need to get to there. Your average is going to be somewhere around here or here. You might only need to get to there to get $500 in profit. More buyers coming in. Drawdown, control. Every trade that gets 1 ADR away from its entry. Let me just turn the crickets down a minute. A lot of buyers coming in. Every position that gets 1 ADR away from its initial entry, yeah, I scale out 1/3 of the position. So what it's doing is the EA enters a trade, short, price pushes against me by 1 ADR. Remember, the spacing on my positions is 1 ADR. So what it's doing is when it gets 1 ADR away, it closes out 1/3 of that position. And then on the next reversal alert, it takes a new entry for me. So I've got a full size position here and a position here with only 2/3 of the initial slot size, which means that my average is somewhere around there. So for me to get out with half an ADR or $500 in profit is actually really easy with 2 positions. Okay. That's it. And the only other setting you need is fake stop loss, so to make sure it removes your stop loss. And you need a higher time frame filter set to true. So it ignores the higher time frame filter after the initial trade is taken. Hopefully that wasn't too fast. That is my entire H1 M5 EA strategy in one go. There you go. Refinius, which EA is this? Look above you in the chat there's a link literally just been posted to the Market Reverse Alerts EA. That is the EA I'm talking about. There you go. Oh, what did I say, guys, on this candle? Let's zoom in. I'm just going to go back in time because I love it when a plan comes together. What I said was, hey, look, there's a load of buyers coming in. What they're doing is they're enticing long so that all the buyers put their stops under there. They'll push it up to there, and then the limit orders will trigger off of that candle and push price back down so that they take out the liquidity there. God, could you have even got it more accurate? God, I'm good. I'm only saying it because I know it's going to be a crappy day, and it's it's a rotation day. Don't try and make money this afternoon. You're just going to get killed. Look at it. If ever you wanted a more accurate John Wick, that's it. This is John Wick today. He is going to be cross. There are going to be blown accounts all over the world this afternoon for people trying to trade indices. Pop. There it goes. No one is going to be cheering. They're all going to be, what the hell do I do next? I know, I'll news trade FOMC. There goes account 2. Don't do it. It's far too wiki. Far too wiki. Hopefully that was okay, Derp. Yarp. Any updates on the support resistance EA logic you showed last week? No. I haven't had time to do anything. I've got so many EAs in development. Strategies. I say EAs in development. They're not really EAs in development. They're strategies which I'm testing. That's the wrong one. I've got a support resistance one as well, which it's basically trading support resistance zones, which is there's still logic issues with it, but and it looks really ugly because I'm testing, but it's last week's high and last week's lows. Basically trading those. Ignore the trades, it's not working at all at the moment. I'm just testing logic on creating the levels correctly and the zones around the levels. Yeah, lots for that. Beautiful. I've got lots of fingers in lots of pies and no time to cook anything. Basically, that's my life. Sometimes wants to revive.com. Someone wants to revive the .com, yeah. God. The next bubble that's going to burst is going to be crypto. Heard it here first. Would it be an idea to do a live seminar or session on the Market Reverse Alerts EA sometimes to take questions? Not really. I've done that. It's on here. It's this. This is 2.5 hours. So this goes through the EA in detail. So what I would say is go and watch that. If you've got any questions, come in a live room and I'll answer questions on it. But to go through the Market Reverse Alerts EA, this was a live session. I think do I do a Q&A at the end of this?
Don't use a stop. Does anybody else? He's not responding, he's gone.
Yeah, this was a live session. So there will be a Q&A in there, but ask just go and watch that and ask questions in here. You can watch that at 1.5 times speed. Although I talk very fast, so good luck because you'll be watching it about 3 speed from a normal human being. Can I go over the opening M515 strategy? Yep, I can do that. Beginner. Although that, again, that is covered in detail on the opening range breakout EA. There is a video that goes through that in detail for 1 hour 53. See, the problem with me in here, yeah, if you ask me to go through this strategy, in 2 hours' time, everybody in here is going to be asleep. And I've already done it. Everything I do, every product I make, every strategy I create and use is explained in intricate detail. Because I don't believe there is a way for me to explain this in 5 minutes. I can tell you basically the opening range breakout strategy is very easy. This is the pre-market opening range high and low. You take a break of the high and the break of the low. Some days it goes mental and makes you fortune. Some days it chops you about and kills you. That in a nutshell is the opening range breakout strategy. But you need to understand the mechanics behind it, why it works, how it works, what the back testing proved, all that sort of stuff. And that I can't explain in 5 minutes. It's all on the website. So go and watch that. I'll be looking to buy these two areas up if we get down there today. So yeah, I can't really go through it in detail. Watch the video. Just, you know, spend a bit of time on the website. There's, I don't know. And the YouTube channel. I'm up to 450 videos on YouTube now. It's very hard to find anything because 90% of it's live rooms. But obviously just go through the basic, all the on the website, the other free trading videos and the position trading bootcamp. And then for intricate detail about the indicators that I've created and use, those videos will tell you everything you need to know about those ones. I have a theory on my Helpy FX Nemesis bot. His entries look very familiar. I think he may have been one of your former disciples. In fact, I came up with a jolly good advert for him, Tim. Dollar pumping hard. Someone else said that. Let the market extend and just wait for price structure to show signs of reversal. Learn it with the market reversal trader. Learn it all with the market reversal trader. I don't know. That Helpy FX one. Verifying your browser. Downloading a virus. Wait there a minute. Let me just execute the virus. Oh, no. Yeah, I don't know. Pro traders giving you their analysis. It's not one of my disciples, definitely, because they're talking about pips. They're talking about pips. They're not one of mine. No one uses pips. Anybody that uses pips is just either ripping you off or hasn't got a clue what they're doing. So it's not one of mine. Look, yearly average profit, 3,900 to 1,120, 11,240. How can that be an average profit? An average profit is one number, not a range. So your yearly range of profits is 3,900 to 11,200, right? And this is why nobody trades. So the free group gets that. The paid group gets that. Well, I'm just going to join the free group and X3 my risk, and I'll get more than the paid group. Accuracy up to 95%. Up to. One is up to 95%. Hi, let's have a chat with Helpy FX. You watch, they're not going to respond now because they're in here. They're watching. Hello. How can I help you? How do you get 95% accuracy? I learnt from a website called The Market Structure Trader how to make 95% accuracy on my trades. Come on. Why don't you like pips? Tarmo, that's all explained in the bootcamp. I'll explain it in a second, actually. It's taking too long. You watch, he's going to explain in one sentence how you achieve 95% accuracy on a trading strategy. This would be good. There's a lot of buying going on. So we're just coming back up into value area high. Here we go. Through rigorous market analysis, tested strategies, and strict risk management, consistency and experience are key. I'm losing the will to live. It's between 85 and 90%. 5%. It depends on the market conditions or volatility. Well done. So you're beating every other trader in the universe, including Warren Buffett, in your strike rate. What? If you told me it was a 55% strike rate, I'd believe you. Yeah. And my name's Warren Buffett. Hello, my name's Al Brooks. I'm just going to hang around just to see what he says. Anyway, I will catch up on the chat. Do something proper. Meaning we have 90% accuracy does not mean you will make times 200 in 1 week. No.
Thanks for the follow.
Thanks for the follow, Mateus. Oh, who's here? Sorry, I missed you. Welcome aboard. Since sometimes we also hit stop loss, our stop loss are large enough to blow our accounts. I'll finish your sentences for you. Let me just catch up on the chat. If Fed increases by 0.25, which is pretty high chance, you think pound US dollar going to dip? Yes, should do. It should do. But it's going to depend on what the forward guidance is. The forward guidance is more important than the actual result itself. 3 to 4 losses in a week can easily eat all the profits made by the trades before, as we're targeting mainly 20 to 50 pips per trade. TP3 is not a 100% science. Right, so the person that's just asked why you do not use pips. Yeah, so he's saying here 20 to 50 pips per trade, right? So if you look at an instrument, right? So gold, the ADR is 384. Pound New Zealand, the ADR is 175. CAD Swiss, the ADR is 78. US dollar ZAR, the ADR is 2,669 in a day, right? So if you use pips to measure success, what you're doing is you are using a measurement which is unique to every instrument and never unique to you as a trader. So this guy on this rip-off website, right, who has said on his blurb that he makes 3,900 pips a year, what that is actually is one short trade on the US dollar ZAR that moves 1.5 ADR. Yeah, that's it. So he goes short once on US dollar ZAR down there, and he can claim that he makes 4,000 pips a year. That's rubbish, because what he did was he risked 0.01% of his account. It moved down 4,000 pips, and he made a return of $1.50. Well done. Make you a good trader? No. So you have to measure your results in a percentage increase on your account. Yeah. So this particular account so far this month has made 8.16% gain, $8,000. 100K account increased by 8.16% means I've made 8K. Yeah. the number of pips that have moved up and down on all the instruments I have traded has got absolutely nothing to do with whether I'm a successful trader and how much money I make on an account. Because as I've shown here, if I go down by 2,000 pips here, for example, or let's say we go 1 ADR on this, that's 2,669 pips. If I go 1 ADR on euro pound, it's only moved 65. The distance it travels in relation to its average movement is exactly the same, except the pip count is 65 instead of a couple of thousand. Yeah. So you cannot measure your success on pips. It's irrelevant. It's a totally useless measurement of success. All it does is it shows you how far this instrument moves based on the pricing structure that has been applied to it by the cross of those currencies. Yeah. This thing, like if I took a trade down here, right, with 10% risk, it shot up to there, and I said, I just made 65 pips on euro pound. Do you think anybody would be going, oh, you're amazing? No. If, however, I said, I took a trade this morning with 10% risk and I made 150% gain on my account, would everybody be cheering and happy and clapping? Damn right they would. They'd be snapping your arm off for that strategy, but they wouldn't give a monkeys about that because that's got nothing to do with it. Yeah. What you return on your account every month is what you pay your mortgage with, right? I can't pay my mortgage with a 65 pip move, but I can pay my mortgage with an 8% gain. So you can't use pips. So whenever you see any Telegram group, any channel, any Helpy FX website saying that they will return you 3,900 pips, ask them what their percentage gain on their account is. When they come back and say 0.7%, walk away, because that isn't relative. This has got nothing to do with it. Yeah. This is all explained in the bootcamp on day one. Where's the bootcamp? I don't know. Bootcamp's gone. It's all explained on day one in the bootcamp. Somewhere in and look at how to measure success as a trader and why you should not use pips, or indeed, you know, just anything. You've got to measure everything in percentage gain, because it's the only thing that matters. If you've got a 1K account and you increase it by 10%, you increase it by 10%. If you've got a 100K account and you increase it by 10%, you increase it by 10%.
Thanks for the follow.
So if you measure your success in percentage gain, whether you're trading that, or 1 million is irrelevant. Your success as a trader with a 9% or 10% gain on a 1K account is going to be the same. Yeah. So if you're going to trade prop, right, and you're going to go with a 25K account and you get 8% gain, well done. What have you made? Well, let's say you get 10%. You've made 2.5K. If you trade a 1 million account and you make a 10% gain, what have you made? 100K. Psychologically, as a trader, the ability to make that every day, 0.5% a day, is a 10% a month increase on your account. Is that achievable? Yeah. Is it achievable to make 4,000 pips a day? I haven't got a bloody clue. How could you possibly know whether you can make 4,000 pips a day? Whether you make 4,000 pips a day is dependent on whether you're trading the euro pound, the pound New Zealand, or the US dollar ZAR, isn't it? If you go and trade Bitcoin, that's 16,568 pips a day. Yeah. If I go short on Bitcoin and it moves a quarter of an ADR, I've made 4,000 pips. Irrelevant. Totally irrelevant. The only thing you use pips for is to measure the average daily range. And even then, you can use it. You could just measure in percentages, but you know, the pip number is important for measuring what volatility is in the market, so you can see how volatile things are. But apart from that, you never ever use pip values for anything in trading, because they will skew your results. I got a beautiful short on euro US dollar, 100 pip move. What's that? Made 10 quid. Oh, right. I got a 55 pip short on euro US dollar. How much do you make? 2.5K. Interesting. Yeah. The pip movement has got nothing to do with volume that you make as a trader or your success. Yeah. That's all covered in the bootcamp in detail. Okay. NASDAQ's gone out the highs. Oh, we're nearly there. I said this morning, didn't I? And if you're in the live room this morning, I said I would imagine this morning will come on in neutral, or rather this afternoon. We're 2 ticks short of neutral. Look. So this is why these yen pairs are unwinding, because the risk has changed, or rather the fear has changed. Okay, so NASDAQ, I mean, you wouldn't have traded this. If you were trading this morning on the opening range breakout, the 5-minute ORB, which is there, you've literally, you're in. So you've gone long, you're in, you've done it, well done. If you took the pre-market, you've had 1 stop out, 1 long. Actually, no, you've stopped out multiple, and pre-market was useless today, it's too choppy. So the 5-minute ORB worked beautifully. There was your entry, there. There was your stop, and that's where you're sitting now. I'm not. I wish I was. Brian, Telegram. Magic 8 ball. Oh, brilliant. Brian keeps sending me John Wicks. That's a good one. That was the other one Brian sent me. Look at this. Look at the difference, right? This is interesting. This is really interesting, right? Look at my John Wick. Look at my John Wick's face. And then look at your John Wick's face, right? Your John Wick's face on both of yours. Oh, God. Looks very similar. Or does it? Hang on, let me get that up over there. Yeah, look. See how drawn out your John Wick's face is? He's got longer face. My John Wick's face looks really different to your John Wick's face. Look, mine is more gritty for some reason. So I reckon OpenAI, when it's doing these drawings for you, knows who you are. That doesn't look anything like me. I'm not saying that it's like you, but obviously it's got a different look, isn't it? It's odd. Who knows how it works? It's magic. It's magic. So there we go. We got John Wick has multiple prediction methods now. That's what he's sitting there at the moment doing, in total confusion as to why he's been stopped out 5 times and completely missed that breakout because he'd hit his maximum daily loss. There goes your prop account. So that's how we trade Magic 8 Ball, pretty much. No, very different. Why you only have 7,000 subs, Tarmo? I have no idea. Don't ask me, ask YouTube. How do I know why I've only got 7,000 subs? I've been trading on YouTube for, I don't know how long. Long time. Because I don't promote myself, Tarmo. Maybe because I don't sell courses and I'm not spending 10 grand a month promoting my channel. I don't promote my channel. I'm not here to make money out of YouTube. I'm not here to be a YouTuber. I'm here because I trade. And I have a load of people that come in all day, every day and talk crap with. David, speaking of talking crap, not about you, someone that comes in here every day, I mean. The analysis you did on the NAS is the same I was making when I shorted it last week for a good profit. I'm interested in the idea you had with the ORB you mentioned this morning. What was the idea I had this morning? We were talking this morning about a breakout. We were talking about a hedge, a sort of lot multiplier hedge strategy. So this again, this afternoon is a good example of it, isn't it? If you took the 5-minute opening range today Well, it worked, didn't it? With you're in profit, so that's not a good example. The pre-market 15, you would have gone short 1, long 1.4, short whatever, long again whatever, short again whatever, and then long. So you'd have taken 1, 2, 3, 4, 5, 6 trades with increasing lot size. Brian, I saw you retract that. Do I have any free signal account on Telegram? No. There you go. I took that well, didn't I? If you want a free signal account, go to Helpy FX. He will help you. He trades FX and he's Helpy. It only costs... There you go. There you go. There you go. Join that. Whatever that is. There you go. Go and join this idiot. I've got Telegram.
Thanks for the follow.
Oh, don't want to go in the VIP group. I just want to join the free one. There we go. I am in Helpy FX. 900 pips a week. What? So here we go. Here is Helpy FX, everybody. Free signal forwarded from our premium group. Created with OpenAI. Look. Basically, what these do, if you don't know about these groups, basically, what they do is they post a trade. And then what they do is, depending on how it works, they adjust these. Yeah, they're all a con. So there you go. There's Helpy FX. Go and help yourself. 2 free FX signals. You're better off though doing that. Yep, go long. There you go. You've got just as much chance of making money doing that as you have of going and joining Helpy FX. Anybody that's got a bot scamming people in Telegram and YouTube is not worth your time. Have you tested this on a live account? Yeah. Tested what? Test everything. I trade everything on a live account. Yeah. Prop, no. So funded accounts, it's difficult to trade. This strategy, the opening range breakout strategy, works fine on prop. But the problem with this strategy is you will have periods of stagnation where it won't make money because the market will not break. So we have days where we don't get opening range breaks that are strong enough. Position trading is very difficult on prop because you have a max daily drawdown. So all of these strategies. This is the ADR reversals. This has done 22% this month. This one's done 4%. This one's done 8%. This is another hedging strategy I'm developing, which done 8% as well. But the drawdown on your account will go over 5%. So none of these have gone over 10%. None of these have gone anywhere near 10% drawdown. But whether they hit the daily drawdown limit or not will depend on what they've banked on the day. Because if this gets up to 5.9%, yeah, and it's banked 2,300 today, you can take off 2.3% off of that. So it never actually hits your equity drawdown limit of 5%. So these will work on prop, but whether they work on prop has got nothing to do with the EA. It's got to do with what happens when you take that prop evaluation. So if you get in there on prop, you will fail. If you get in there on prop, you will pass. And if that's Monday and that is Wednesday, that's the difference between passing and failing prop. Nothing to do with the EA drawdown strategy or anything else. The day you start it was the day will determine whether or not you're a pass or a fail, because all strategies have a losing rate and a losing run. And whether you get that losing run on the day you start prop or not is totally totally down to the market. You can't control that. Derp, he's watched all my vids. Wow, you must hate the sound of my voice now. Breezy, thanks for your analysis on gold. Just profited right now. Hit my TP already. Good. Did I even do an analysis? That was a joke. I don't know where it's going. It wasn't a joke, but it hasn't moved. How can you have even hit a TP? It hasn't gone anywhere. Since I did my analysis, this thing has done that. You can't make money on that. It hasn't gone anywhere yet. It's not going anywhere. Nothing's going anywhere today. It's today is a day about talking rubbish because the market isn't going to move ahead of FOMC. We're stuck and we ain't going anywhere. Euro US dollar. Did you not ask this morning, Prab? Or was it yesterday? Maybe it was yesterday. I recognize your name. I'm short on it at the moment, but that's only because it's an RSI extension short. It will go based on US dollar. So it'll go up or down on US dollar, and quite possibly both. There's no point in asking for any analysis on anything crossed with the US dollar this afternoon because whatever I say, whatever I think is completely out the window at 6 o'clock. The Fed will decide where this goes this afternoon. The press conference will decide the direction. I have no way of knowing whether that's going up or down. I do not possess one of those or one of those. Therefore, I shall sit on my hands and just watch the charts. And use John Wick all the time because I have no way of predicting the future. Are you live at the news? No, I'm not, meme star. I'm out this evening at a spin class. Actually, no, I'm doing body conditioning this evening. I don't trade the news. So I'm in trades. I will be in trades when the news is coming out, but I don't physically trade the news. It's too dangerous. I try sometimes, but I always lose money. How about you show us some 1 minute scalp settings to start with using the market reversal alerts EA because 1 minute scalping doesn't work. Why would you want to scalp the 1 minute time frame? It's just ludicrous. You're just gambling. Going to the casino, it's the same thing. What's my strike rate? 65%. The reason my strike rate is 65% is because a lot of the times my trades are one-hit wonders, like those. And a lot of the times my trades are two-hit wonders. That's actually a one-hit wonder, but with a scale out. So I take a loss and a win, which gives me a 50% strike rate. Some of my trades have 3 to 5 positions on before they play out. And during that time, I will take drawdown on some of them, which drops my strike rate. My overall profitability on positions is near on 95%. But within those positions, there will be losses like this. Yeah, this was a losing trade of about $700 because of all of this scaling out. But it all closed out in profit. Yeah, so if I didn't do any drawdown control on this, that, and that produced $500 in profit. However, on the scale outs, I took losses. So the strike rate on this is 4 wins and 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 losses. Yeah. However, those 10 losses were only 30% of the position instead of 100%. So if you take that 10, divide it by 3, the actual loss is around about 3.3 with 4 wins. It's complicated. Go and watch the bootcamp. You can't talk to me about strike rates and stuff like that. Your strike rates are irrelevant with the way that I trade. It doesn't make any difference, your strike rate. I'm wrong all the time. I'm always wrong. Yeah, look at my, I'm not always wrong, but look at many of my trades. That one there, yeah? Short, win. Had to take a scale out there of 0.3% of that position. However, that position and that position well outweighed that tiny little loss. EuroCAD, when was this? Let's have a look. EuroCAD. So exit was 10th of March and 14th of March. EuroCAD, 10th of March and 14th of March. So the EuroCAD loss (10th of March). EuroCAD, yeah, 10th of March. Where are we? That scale out. Am I blind? Euro Swiss. I can't find. Oh, there it is. EuroCAD. So I took a loss of $157, and then on the 14th at 9 a.m. I closed the other two out for a grand total of $300, call it. Yeah. So I made $150 net on that whole position, that whole triangle there. So my strike rate on this is entirely up to you. I call that a 100% strike rate because trade position was a winner. I made a profit on it. So do you class a strike rate as making a profit on your trades, in which case I would say 90 to 95%. If you class it on an individual position, trade rather than a position, I made 1 loss and 2 profits. So my strike rate there is 66.6%, which is why I say I've got a 65% strike rate, because that's the way people traditionally measure your movements, isn't it? Your success. But I'm not interested in it. Doesn't help me at all. Tim, hey trader, I achieved 120 pips on my pound New Zealand trade, but only 90 pips on the Aussie dollar US dollar trade. Winner, winner. Oh, hold on a sec. Winner, winner, lost a load. Exactly. That's why you don't use pips. If they were achieving that, they wouldn't need to sell signals. Well, this is my whole argument, which I have all the time in here about courses, isn't it? If they were making money doing what they teach, they wouldn't need to sell the courses, would they? Bro, look at Euro US dollar. Just done that, haven't I? I've caught up. I'm catching up on chat. I'm halfway through. Neo, good afternoon. You're always late. Can you explain ADR for a beginner? It's explained on the website under the ADR indicator. That's the wrong one. ADR indicator. There's a video that explains it. But in a nutshell, average daily range is the average daily range. I don't know how else to explain it. The average movement of an instrument over a period of time. So I use ADR 10, which is the last 10 days of movement. Yeah. 7, 8, 9, 10. So we take how far it went from the low to the high, which is the daily range. We take that measurement over the 10 days, which is these movements here. Yeah, how many pips that is.
Thanks for the follow.
Big one there. Right, we take those 10, we divide them by 10. So we add up the total pips moved for the day, divide it by 10, and that gives us our average daily range. So the average this thing moves over the last 10 days is 122 pips, which is basically from, these lines are drawn from the low of the day. So for an ADR hit, as we call it, to be achieved, it has to move from the low of the day up 100% of its average daily range, 122, or from the high of the day down 100% of its average daily range. Yeah, so that is an ADR hit to the low. That is an ADR hit to the high. These levels will obviously adjust during the day and be dragged up as price moves up. And then if it moves down and makes a new low, these lines will be dragged down, because if we make a new low, to get the ADR, we need to know what it is from the low of the day to that measurement of 122. And these percentages here are achieved by back testing. I've downloaded data for, I can never remember how many years, call it 15, 20 years or something. I can't remember. It's in the video. But I downloaded data for the last 20 odd years of every Forex instrument. And then I extrapolated what the average daily range 10 was every single day. So every day I calculated the ADR 10 figure by taking the last 10 days and doing all that calculations. And then I looked at how many times it moves outside of that ADR 10 figure as price moves. And it was 42%. So it tells us that 58% of the time, price stays within its average daily range. When it moves outside, these are the percentages, chances of it increasing beyond those levels. So when you hit ADR 150, only 12% of the time it will move further than that. When you get to ADR 225, only 2% of the year it's ever going to get out of that level. So we can use that data in two ways. First, when we exceed ADR, the chances of it going further are less. Therefore, the chances of it coming down are more. But it can go up and get stuck sideways and then go up again tomorrow, or it can go up and it can come down. Those are your odds. So what it does when you get extended beyond ADR levels, there's a 6% chance of it going that way, but that doesn't mean there is a 94% chance of it doing that, because it can do two things. It can go sideways or it can mean revert. However, if you take ADR reversals, which is this set file here, yeah, price moved down by over an ADR. We took a reversal alert and back out. Price moved up by over an ADR. We took a short and back out. Yeah. So the ADR strategy to get into trades uses the ADR as an entry indicator. So when we get above these levels, we look for reversals and we take a small move, usually a quarter to a half of an ADR move to the downside. Why do we take a quarter to an ADR? A quarter to a half of an ADR? Because 58% of the time, price moves within one ADR. So if we set our targets within that ADR, within 122 pips, the odds of us hitting it are very high. So the odds of it going further here are very low. The odds of it moving back by less than 122 pips are very high. So that's what the ADR reversal strategy does. The other way we use it is if we are long, let's say now, I'm short on EuroCAD now. If EuroCAD now comes down and hits ADR and I'm short, I can use it as an exit signal, because if I'm short on EuroCAD and we've hit our average daily range, there's a 42% chance we're not going to get any further than this. If we get down to 150 ADR, there's only a 12% chance of going further. So if I'm short with $500 in profit, I'll probably take it off, because there's much more chance of it doing that than there is of it doing that. Yeah. So that's ADR in a nutshell. And pretty much probably that 35-minute video covered in 5 minutes. Ish. 2:30 oil news out. Yeah, you're right. Sorry, I just seen that. Weren't watching oil, were we? So got some bullish movement on oil. We are back up into resistance though. So this is obviously the 4-hour resistance that we're batting into at the minute. So we are pushing up into it again. So we'll see if we can crack it this time. And if we can, then the run up is to ADR today, I would say. So yeah, this is a perfect example of using ADR. We've just had positive oil news. If you're going to go long now and take a breakout, where should you target? ADR is probably a good spot, isn't it? There's your stop loss if you're using a stop. So have you got enough room to ADR to make it worth a good risk reward trade? Yeah. Obviously, it's got every chance it could go way beyond ADR, but that is a major resistance zone, which has been tested 4 or 5 times in the past. And it's also its average daily range extension for the day. So when we get there, I would say there's way more chance of it doing that than flying through it, wouldn't you? So all this goes together to help you make a decision. So if you see a solid resistance level at ADR, get out. Or if you fancy this as a resistance bounce, get in. Either or. It works both ways. It's a very, very versatile indicator. There you go. That's ADR. Do you have any signals on Telegram? No. Is your course free? Yes. It's on the website. Everything's on the website. Just go to the website. It's all there. Not the hedge idea. Sorry, David. We were talking about the ORB. Not the hedge idea. I will go back to the London session live video. I believe I recall you hearing say that you had an idea with the ORB. Ah, right. Yes. So the ORB idea is, I haven't tested it, but this is what I'm going to test. It needs testing. That'll do. And I don't want to take that one. So the idea is to have the trailing, I don't want trailing stops. Stop loss, stop loss, stop loss. Where are we? Risk, that'll do. Sorry, everybody that's joined. I'm really, really slacking, aren't I, on saying hello. El Moro, Eric, Ligam May de Castillo, Pau Ferrer, Chinmay Thakur. I'm going to have to get some language lessons. GT Prab, welcome aboard. Thanks for subscribing. Hopefully see you soon. So yeah, the idea is I'll do it with a 0.1. Actually, no, that won't work. It needs to be a risk-based. Let's just do it. Right, so we are going to use something like 125% of the opening range, yeah? And we're going to use the 5-minute opening range only. But we are going to add a trailing stop, which is also 125% of the opening range. We want to tighten our trailer. Tighten trailer when the profit, start trailing immediately. Use break even, no. Let's turn that off for a minute. Just making sure the other settings are correct. And I want to take retests of the 5-minute ORB. False. Right, so this is the what I was going to test. I'm just going to turn the crickets off because there's no point in listening to them today because nothing's happening, is it? Well, it is happening, but it's you've missed it. This was the one trade today. Other than that, you're just going to muck about here for the rest of the day. So, so this is the idea: is to use a wider opening range on the 5-minute only. So if I use, can I use open prices? I probably can test with open prices. Prices on the 5-minute on the DAX. Okay. So this is my idea. So what I've been witnessing with the opening range, high account balance 120. That's probably going to muck up my trades. This is something I was doing for someone earlier that was trying to trade £120 account. So when we get the opening range break, why did that not trade? Did I not load the DAX set file? Okay, let's manually do this. 10. And 05. Okay. set files wrong. Yeah, so what we're doing is we're taking the opening range breakout on the 5 minute, but using a wider stop loss based on the opening range size. Because what I have been witnessing, yeah, so here we go. So we're long here. We're immediately into break even. So the entry's there, the stop was here. And we're just basically trailing that distance on the opening range break. The idea being is it's wider than the opening range. So what I'm witnessing many times is beautiful 5 minute opening range breaks that go like that. So they're really stepped. What's happening and what would have happened today is I'm getting stopped out on these pullbacks. So what I want to do is test a wider stop based on this opening range, but I want to test the opening ranges because I get the feeling that the success of these ones where we're trailing on the percentage of opening range, I think the success rate can be increased by monitoring the size of the opening range, because some days we're getting huge wiki 5 minute opening range candles. And of course, it's using a massive stop loss. So I think there's a argument for just using small ranges. The problem I've got is that the EA at the moment only works on pip size. It needs to be adjusted to use average daily range. So I've got to redo the EA and just do some tweaks to it. But I've been witnessing this happening an awful lot. So there's the stop out there. And look, the move continues. So there's a way to get more money out of the move. This one didn't actually go much further, did it? But it's to do with this percentage of opening range. And I think there's an edge there, which is slightly better than some of the other set files. So you look at that sell. What was that on? Hang on. So that sell is on there. Look. Let's take another one. Oh, this is not set up right. Anyway, ignore this. But this is the idea. And you see with the opening of the 5 minute opening range, because we've got a wider stop, it doesn't stop you out and you get into these. But what I'm trying to avoid is getting stopped out on these big pullbacks that we keep getting on these really awkward trend days like this. Bang, awkward pullbacks. These are fine. There's a TP hit, look. But yeah, so that's my test that I was going to run. It's not related to the test that you said you were going to do. So anyway, that was the test I was going to do. Just explaining it. I've got to do some recoding though, because it's not set up to do it. But the hedging one is the one we were talking about this morning. So can I explain again my analysis on Euro Yen Pascal? So Euro Yen, I believe, is going to come up and is going to close this gap. Because this propulsion gap was formed by a run on the yen, a safe haven run on the Credit Suisse problem, and to do with the SVB banks going pop. So I think we are just going to get a complete recovery move back up into there. Yeah. However, they have started to sell out of it this morning. So it may be a case of there are speculative traders in here that are going to try and drive this back down into this propulsion here and here. So these are the targets. I am short now based on an H1 M5 entry, and I'll probably be out before this, but getting down into there. However, second entry would be a push back up into here. Take a second entry, average out when it's coming, but I still think it's going to come all the way down here anyway. But the yen will be a sell until there is a lot of strength coming through on the euro, I think. So I'll be looking for sells on it because we've got a fairly strong yen at the moment, and there's every chance that the Japanese will intervene again and drive this back down further. So I'll be looking for sell orders on it. But today it's going to go mental this afternoon. This evening, the yen is going to fly, euro is going to fly, everything's going to move basically because the US dollar is the world's currency. When the US dollar fundamentals shift, every single other currency that is crossed with it, everything, basically the majors, everything moves. Because if you want to suddenly buy a load of US dollar or sell a load of US dollar, what do you have to do? Convert US dollar into a different currency. So when the US dollar has a push or a pull, regardless of which direction it goes, to be able to make those trades happen, you have to pull money out of other currencies. Yeah. So pound US dollar will move because people are converting pounds into US dollars or converting US dollars into pounds. That's why that moves. Yeah. So the US dollar is crossed with everything. So if you are suddenly going, crap, this is going up to 5.25. We need to get all of our money out of the pound and into the US dollar because the interest rate is better and we're going to earn more money. Every single pound pair will come down because people will be dragging money out of the pound and pumping it into the US dollar. So everything moves. So these euro yens, you know, the analysis I give you on anything is irrelevant. This is how I'm trading it. However, I have no idea if it's going up or down. If I knew that, I would just consult one of these. Well, I don't. I have no idea. If I knew the answer to that, I'd be a millionaire and I wouldn't be sitting here on YouTube begging for your money. Well, not really. I'm turning into a comedian, aren't I? I want to get the ORB, but I struggle to see how to identify the right settings. You have, do you have learning material? Yes, it's all on the website. I just saw the second half of your comment, Michael. 10 to 50% a month. Hopefully that was a joke. I have no idea how much you'll make every month because the market decides how much you make every month. I've done Euro US dollar already. Look at gold. I have looked at gold already. Euro US dollar I've looked at already. Are these set strategies for your EA? Yes. How to come by these? All on the website. Opening range breakout. So just go to the page on the website. Opening range breakout. All the links you need are in the description below, and they're being pummeled into the stream chat every few minutes. There's a link going in there to the website. And there are links on the website to everything you need. How do you come by the news? Can you explain about the news and its effect? So if the news is bad for US dollar, does that mean that all the pairs like the pound US dollar, euro US dollar will go up? Yes. I think I've just explained that, haven't I? Before I actually read your comment. But basically, fundamentals, this is the key fundamental that makes something strong or weak. Yeah. If you are an investor and you need to put a large sum of money somewhere to earn interest on it, you'll put it in the US dollar because you're going to get more. The overnight interest rate will be offered by the banks will be higher than in Switzerland. So you will hold your money there longer. And as interest rates are higher, it's easier to make money. So that encourages people to invest in businesses within that country, which drives that up. So when you get to where we are now with the US dollar today going up to 5, this is what we call terminal, potentially what we call terminal rate, which means it's the maximum interest rate that the Fed are willing to do. And what they will do is now monitor for the rest of the year and then start to drop it. When they start to drop it, they become less attractive, which weakens the US dollar. But they will only do that if inflation keeps coming down, unemployment stabilizes and keeps coming down, and their GDP continues to go up. Otherwise, they will adjust these. And all of these together create an overview, which is what the central banks and institutions use to make decisions on whether they go long or short. Yeah, it's called a scorecard. And that gives you an overall rating for each currency based on its interest rates compared to each other. So this is what we call the differential. There's a page on differentials here. So these numbers are what we call the differentials. So the differentials are calculated based on what is the interest rate on the Aussie dollar and what is the interest rate on the CAD. What is the difference? What is the differential on their interest rates? And the differential on their interest rate changes. And we give plus and minus scores to each currency pair based on all of the data. So at the end of the day, you don't need to worry about what the news is. Fundamentals will tell you which way to go long term. Short term can go anywhere it wants. US dollar CAD is a buy. US dollar CAD has been coming down for the last few days. Yeah. So just because it's a buy doesn't mean it's always going to go up. It means that the pushes will tend to be stronger, because if you want a trend, what do you need? New highs. To make a new high, what do you need? Stronger pushes in buys. Yeah. New high. New high. So to make a new high, what do we need? More buyers. The buyer scorecard is telling you that it's more likely they will push new highs than it is that they will push new lows. But it's not guaranteed. Nothing's guaranteed, obviously. Things change. This afternoon, this could all change. This evening, the fundamentals on the US dollar could completely shift, because they might drop their interest. If they drop their interest rates this afternoon, the US dollar is going to come down. The US dollar will be sitting somewhere down here. No word of a lie. If they were to drop down to 4.5 this afternoon, this thing would be here. If they were to pump it to 5.25, it will be off the top of this chart. It's that important. If you don't know about it, you can't trade Forex. You've got to be on it. Have seen the John Wick 4 GT Prab, have you? You lucky thing. I'm going to watch that as soon as I can. Everything's on the website, Michael, as I just said. Can you explain about the news effects? I've just done that. As well as the mean reversion trades, do you still take the trend pullback using the other EA set file? I do in a way, yeah. I don't focus on it at the moment because the fundamentals at the moment are very mixed and very range bound. So pretty much you can take everything in every direction. Personally, I like more trades that support resistance. So I'm much more interested in taking things which are at major levels. Yeah. I'd much rather take those than those, although that one was still also a good one. But so yeah, it's entirely up to you. There is no right or wrong. Yeah, every single one of the set files and the strategies works. Sometimes you just need to pick one, and that's why I give so many. Yeah, if you just want to take the trend pullback ones and use the moving average filter, do it. Nothing wrong with it. You'll just miss those. Doesn't matter. If you want to take all of them, fine. If you only want to take them at specific levels, put the EA on when we're getting to levels, and you'll start getting into those ones only. There's no right or wrong. Position trading is about managing the position. You get into positions. Yeah. Everything that goes green, you just let it carry on going green. You just let it go in the bank when it's ready. And everything that goes red that you need to deal with, you deal with it. Yeah. How you get in, and I said this many, many times, how you get in, why you get in, what strategy, bias, or whatever you are following has nothing to do with the success of your trade. The success of your trade has to do with whether the market goes up or goes down by your target when you enter. If I'd have entered a short position here, I'd have taken 1, 2, 3 to get out. However, I took a short there and got out there. Yeah. If that trade there, I'd have had a target of 1 ADR on it, I'd still be in that trade. There and there. I would have exited it there. But the fact that the target was half an ADR means I exited there. If it was a 1 ADR target, I wouldn't have reached it and I would be in 3 positions. You see what I mean? It doesn't matter when you hit the button. You will always get an opportunity to get out of your trade somehow. Look at the CAD Swiss. That was a hideous one. I got out of it. I just got out of it. But it was horrible. Horrible for a week. Yeah. Should I have been longing it? No. Yeah. If you know, but look at the CAD Swiss from the fundamentals. Yeah, it's a sell. When I took that, that was a -3. So if you want, you could set the market reverse alerts EA up to say anything that's a minus, I'm only ever going to short it and I'll never take a long position on it. And everything that's a plus, I'm only ever going to long it and I'm never going to take a short position on it. And that's absolutely fine. So you wouldn't have had that. I did. If you'd have been using the trend pullback, you wouldn't have had that. I did. Yeah, you know, but what will happen is you will be in a trade at one point, Aussie, New Zealand, perfect example. You will be in a trade at one point where you are taking a long because you're taking the trend pullback EA variation where you only take trades above the 72 moving average. You will get in there on a pullback. You'll get in there and you'll get in there and you'll be like, oh, crap. Oh, no, I'm stuck.
Thanks for the follow.
But at the time of taking that trade, it was a legitimate entry. So, I mean, it doesn't really matter. You just got to deal with what happens after that entry's happened. But there is always a way of increasing your odds. But when you're doing that, you're always going to miss out on lots of opportunities as well. But if you want to be super, super, super strict, draw a line in the sand there and there, scrap that lot. Everything that's a 1, you set the E8 to go long. Everything that's a -1, you set it up to go short. You will never, ever take a short position on any of this lot, which is fine. The odds are in your favor. Or use COT. Say, if it hasn't got a COT plus, I'm not going long. So forget the fundamentals. It's got to be COT plus. Yeah, so you could do that as well, couldn't you? So you could go over to the combined sentiment page. You could say, I am not going to take when it loads. It's already open. I'll use that one. I'm going to take only COT +4s and -4s. Yeah. So you would go and set your EA up only to short those and long all of that lot. You could do that. Again, there's no right or wrong, but you're going to get some beautiful mean reversions on these because as it pushes up, it's going to pull back. It's going to push up, pull back. It's in a trend going long, but there's plenty of these. It's just that the squeezes are the ones that hurt. And to avoid the squeezes is very difficult because you could be in a trade when a fundamental shift happens and you can't do anything about it. You will get squeezed on it. So I have come to the conclusion at the moment that trading in either direction is probably viable, purely because most of this stuff is not massively signaling long. US dollar CAD is the strongest at the moment, but that's because of oil. Look at what's happening with oil now, down at $65 a barrel. We've got a possible big run up, which is going to strengthen that Canadian dollar, which is going to bring that down. Yeah. And these are never getting anything more than a -5. You need a -4 to trigger a sell. So as soon as retail shifts back to neutral on these two, they become -3s. And they are not sells anymore. So there is no right or wrong. And this is what everybody tries to do, isn't it? Everybody tries to find that system or strategy or perfect thing that is the holy grail. It doesn't exist. Get in, get out when you get money. If you overthink it and go, oh, which set file should I use? You'll drive yourself mad. Go and back test the set files. They'll work. But they will all need at some point some kind of manual intervention, probably on aggressive drawdown control. But if you reduce the odds of needing to do aggressive drawdown control by only going in line with COT, by a scorecard or trend, you're probably going to get less squeezes. I'm pretty good in a squeeze. But if you're not good in a squeeze, then do that. You'll probably get less entries. You will get less entries. But who cares? As long as you're making money, doesn't matter, does it? Hopefully that answers the question, Tim. I am taking trend pullback ones, but I'm not using the moving averages as a filter. I think that's the question, isn't it? I'm not using moving averages as a filter, no. I never have done. I know other people do, though, quite rightly so. Can you give your thinking on natural gas? No, because I don't trade it. I don't even have the instrument. Have you seen John Wick 4? No, I don't really want to. Had to switch over to Starry AI. Ran out of Mid-Journey credits. Oh, is there another one? Is there Starry AI? That's why you're getting different drawings then, probably, I guess. Afternoon, John. You're late. So many moon boys now in the market. Like it. Welcome aboard, Jason. Sorry, I missed you 4 minutes ago. Jason Tamlunzi. Good name. So many moon boys. That's a terminology I've not heard before. A moon boy. Sounds ominous. So your NASDAQ basically is just pulled back into the propulsion gap. So the propulsion gaps are formed on breakouts usually, and obviously that is where those buyers started buying. They are adding back into their positions. So potentially market structure, that is your pullback for a long entry out of there. That wick. But today, I'm not sure you're going to get another leg. It's 3:20. We've got 3 hours to go until the news. The chances of that getting another leg in, I just don't see it. That DAX, we haven't got the gap fill either on the DAX, have we? Again, opportunity for a short on the DAX still. If the US dollar powers up, that will come down. So obviously if the US dollar weakens, the DAX will drive higher. So again, all down to the US dollar, and that's within an ADR. So that gap fill trade from here with a stop up there right now as a risk reward, beautiful. However, don't blame me if you get wicked out in the news and then it comes and does that, because that's what it does in FOMC and that's what it does in the news. Also, don't forget, there is the opportunity where FOMC is completely flat and the market goes, I really don't want to enter any positions because I'm worried about banking. You know, what do you see? What do you do? There's nothing you can do. It'll do what it does. Does your EA have to sit on the lower time frame? Yes. So if you're trading H1 M5 strategy with the EA, so in mean reversion or whatever you're trading, if you're trading H1 M5 or H4 M15, which is this instance here, the RSI is the higher time frame. That's what we're using as our filter to identify extended market conditions. And then we are using the M15 time frame to take the reversal alerts in line. So you put the EA on the lower time frame. The EA will trade on the time frame you put it on. So it takes market reversal alerts on that time frame. Yeah. Leo, I've just seen your post. I can't tell you what gold is going to do. Honestly, I have no idea. You tell me which way the US dollar is going this afternoon, and I'll tell you which way gold's going. How about that? Do you know if there are any prop firms that allow basket trading? Yeah, they all do. Most of them do. Most of them. Kenny. I've position traded with my Forex funds. I blew the account, but I position traded with it. Did I get paid on that? I don't. No, I don't think I did on that one. I haven't been paid on it, but I have traded it, and I've never had any flags. When you look at prop, the only time they'll ever really, I think, scrutinize your strategy is if you are doing a very large withdrawal. I think that's the only time they would ever do it. And when I say large, I mean 10, 20K plus. Other than that, I don't think you'll ever need to worry about it. Welcome aboard, George. Thanks for subscribing. So that I don't think you need to worry about it. The only thing you need to worry about with position trading or basket trading is if you're using a lot multiplication. Some of the prop firms have a martingale rule, and what they call martingale is so if you take a 1 there, right, and if at that position you took a 1.01, they class that as martingale. basically taking a second position while in drawdown, which is larger than your first. And obviously that isn't martingale. That's nothing to do with martingale. If I took a 1.02 there and a 1.03 there, I'm pretty much taking a 1, aren't I? There's very little difference, you know, pence or cents, you know, nothing. So just check their terms and conditions. If they say you can scale in to baskets or not, is fine, but watch out for that. Some of them stipulate that you cannot do martingale, and it does actually state martingale being doubling up your account. Proper martingale. Take a 1 lot, a 2 lot, a 4 lot, an 8 lot, a blow your account lot. Yeah. So check the rules. Check the rules. They've all got their own rules. But E8 are fine. My Forex funds are fine. Fidelcrest are fine. You can't do it with the fivers because they force you to use a stop loss. You have to use a stop loss with the fivers, so you can't do position trading. Well, you can actually. You can, and CTI as well. You can, but you've got to put like a 2 ADR stop on, which means you've got to use fairly high lot size. If you use high lot size, you'll never get the positions on because they only give you 1 to 10 leverage. So basically, you can't do it with the fivers. There's a few that you can't, but most of them you can. That EU move was beautiful, John. Was it? Where's it gone? Hasn't gone anywhere yet. Look. It's literally moved just over a quarter of an ADR today. It hasn't gone anywhere. That's not a move. That's just not going anywhere. Hasn't done anything yet. The Asian range was 17 pips. The London range was 31 pips. I wouldn't call that a move. I would call that waiting for FOMC. You watch it this afternoon. That's going to be a move. Is there any particular or set of signals that allows us to firmly determine a typical ADR? An ADR is an ADR. There's no way of determining an ADR. ADR is ADR. It's not, there's no different. No one can give you a different ADR. It is the average daily range of the last X days. In my case, 10. You give this to 1,000 people and ask them to measure it, they're all going to give you exactly the same figure because it is what it is. There's no interpretation of it. Actually, that's a lie. You could interpret it in 2 different ways. Some people, when they calculate ADR, they use today's candle, which I don't believe is correct, because if you get that movement today, your ADR figure will dynamically change throughout today. So the way to measure it is to take candle 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Yeah, so you take those 10 candles. Yeah, the last 10 days closed. Add them together, divide them by 10. That gives you ADR. There is no other way of looking at it, apart from using today's figures. But like I said, that really skews it. DAX is going down. We're coming back down for this propulsion fill. Remember I said this morning, that was your target today. And then obviously down to the gap fill on its way. Taking its sweet time. A lot of crypto moon boys popping up on YouTube. There's been crypto moon boys popping up forever. How often do I live stream? Twice a day. 7:50 in the morning, 1:20 in the afternoon. At the moment, basically I'm here for the Frankfurt Open and the New York Open. Whatever time zone you're in. Whenever London opens and Frankfurt open, or whenever Frankfurt opens and New York opens, I'm here. For the stock market, that is, obviously. It changes depending on your time zone, but twice a day. What's your thoughts on gold? Sorry, I've just, Leo asked for that as well, didn't he? So Hash, I'll ask the same question to you. Which way is the US dollar going in FOMC this evening, go the other way. Yeah. So if you know which way FOMC is going to take the US dollar, go the other way. I can 100% guarantee your trade will succeed. 100%. No word of a lie. 100%. If you go the opposite way to the US dollar, the gold US dollar cross will go the other way. If you want me to give you a prediction on it, I can certainly do that. Is my message becoming clear? I get it. There's lots of new people in here. This is why we have so much fun with it every day, isn't it? Because every day there's new people in here asking the same questions, and I give the same answers. And only so many times you can give the same answer without getting sarcastic about it. If I knew the answer to that, I would be a millionaire, Rodney. Where are we going to get face cam? When are we going to get face cam? I don't know. I don't know if I want to do face cam. Is it really going to add any benefit to you to see my ugly mug sitting up in the top right-hand corner? Yeah. Is that a better way to get analysis on your trades? I'm going to cover up the chart. And if I put myself down there, I'm going to cover up that bit of the chart. If I put myself down there and the market's moved down, I'm going to cover up that bit of the chart. And if I put myself up there, no one's going to know what pair I'm trading because they never read that. They're always trying to look at that. If I put myself in the middle here, I don't know. That's why I don't do it. It just takes up room, doesn't it? And there's no advantage to seeing me. I'm a 50-year-old English bloke. I look like everybody else. Just got scruffy. Do you know why I don't do it? Because I trade and I work from home, and I very rarely go out of my trading den. Sound like Greg Secker, don't I? My trading den, my office. I never shave. So if someone comes onto the stream and sees a bloke that hasn't cut his hair for 6 weeks and hasn't shaved for a week, I'm not sure they're going to stay around, do you? Maybe one day I will. I have thought about it. Just, I don't know. I know you don't trade Bitcoin, but I am more of a new school trader. I trade crypto. What hike rate we need for Bitcoin to keep going to the moon? I don't know. I have no idea what so basically, if you're trading this, if you're trading the CFD of Bitcoin, you will, with the vast majority of brokers, with the vast majority of brokers, you will be trading Bitcoin versus US dollar. You can also trade Bitcoin versus Euro, and Bitcoin Cash versus US dollar. Yeah. So you're either trading the Bitcoin against US dollar or against Euro, aren't you? So it's a cross of the US dollar. Same applies for gold. If you're trading this and the US dollar goes down, this will go up. If the US dollar goes up, this will go down. The distance it moves will be dependent on the strength of the move of the US dollar. And that no one in this universe can forecast for you, because it depends on how the banks are positioned on the US dollar and whether they factored in a 5 or a 5.25 rate. And what the Fed gives us will determine the strength of the move. So there is no one that can tell you that. If the US dollar comes down, this is a stock index, right? Look at Bitcoin. Thanks for the follow, Wilbert. And Danush, welcome aboard. This is a stock index now. So look at the US dollar, the US 500. Look at the S&P, right? Too zoomed in. Look at the movement of the S&P. Look at the movement of Bitcoin. That's a really bad drawing, isn't it? it's moving very, very much the same as the stock indexes now, because it is being driven much more by the US dollar. They removed the peg on dust, didn't they? Or something. The peg was removed from Bitcoin and the US dollar or something. I can't remember what it was. Something got removed, which caused a chaotic spike, which is why I don't trade it, because if that chaotic spike went against me, I'm going to lose all my money. But overall, when the US dollar moves in one direction, so when the US dollar goes down, the S&P goes up. When the US dollar goes up, the S&P goes down. When the US dollar goes down, Bitcoin crossed with the US dollar will go up. So as far as I'm concerned, the reason I don't trade the Bitcoin, for example, or Ethereum, is you are literally just trading another US dollar cross. I have enough US dollar crosses in my life. Yeah. I've got US dollar crosses coming out my backside. I don't need another one. So, you know, it's difficult to predict anything with Bitcoin. Same thing as US dollar cross. I truly appreciate you sharing your knowledge. Thank you. That's okay. Gold disclaimer. Brian's going to... Have you put any coffee on your screen tonight, Brian, today? Gold, 1935. Any possibility? Yep, definitely. Definitely there is a possibility of gold hitting 1935. If you look at where 1935 is... 1935. Yep, that's 1935 there, right? So it's hit it back here a few times, and it hit it there. It's come down and it hit it twice in the last 48 hours. So yeah, there's definitely a possibility of it hitting that. Absolutely. Sorry. I don't know. If the US dollar goes up, yes. Getting right. I'm going to help you here. You're looking for 1935. So if you're looking for 1935, you're trading the 1 minute chart, because if you're not trading anything higher than 1 minute, there's no point in going for 1935, is there? Because it's only the low here, basically. Yeah, that's 1935, right? So it's within yesterday's low. This blue dotted line is yesterday's low. This grey dotted line is the Asian session low. So you're trading 1 minute. The odds of it going down there or up above that level are 50-50, right? So what I would do right now is hit the short button, because you've had a reverse alert and a retest. So there's an end pattern reversal. So it looks like there's a structure break happening. I would hit the short button now, put a stop loss up there, and put a TP at 1935, right? Your risk reward on that trade is somewhere in the region of 2.5 to 1. If the trade pans out, you win. If it doesn't, you lose, right? But what I would say is you're selling straight into a propulsion gap where they will probably buy it, and into a previous resistance level, which will probably turn into support on the 1 minute chart. I haven't got a clue whether that will hold, because all you're actually trading is algorithmic chop on the 1 minute. There is actually nobody involved in pressing buttons at this level. There you go. That's gold. I'm only being sarcastic because I get asked about gold every day. I think people come in here purposely. I reckon there's a YouTube, a Telegram channel going where they're like, here, go and ask this bloke about gold. It's hilarious. I reckon there is one of those on the go. And there's this bloke called Brian in there, and every time he talks about gold, Brian spits all over the screen. Honestly. I know I will buy a Bugatti tomorrow. God, I hope so. How are the IC markets for brokers? Pretty good. IC markets, good spreads, good commissions, but they're like any other broker. Their job is to make you hit the button, and their job is to spread you out over the swap. So IC markets are the same as every other broker if you use a stop loss. And they will spread to the extremes. Where can I get the times when different sessions start? It's on the website and the live room. There you go. Ignore that. And that. They're not right. They will be right on Monday. I haven't been bothered to change them. I can't be asked. It's only 2 weeks of the year, and I really can't be bothered to go on and just change that to a 1. It's New York. It's the New York session. It's 9:20 New York. And 2:50. That's right. These times are right. These ones are
Thanks
wrong
for the follow.
at the moment. No, that's right for me. I don't know. New York Open. Go and look on your chart, right? Look at the NASDAQ. Go to properties, volumes. Right? That's when I come on. That'll give you, right? So when go and look at yesterday's chart. Whenever that happened on your broker, that's when I came on. That's the easiest way to find out when I come on, isn't it? Look, go to the DAX. Yeah, go to volumes. Go out. That, you can't see it, can you? Yeah. That's when I come on. That one, that big spike there. That's me going live 10 minutes before that and 10 minutes before it does that on the NASDAQ. That's all I'm interested in. God, we're talking a lot of rubbish this afternoon, aren't we? Boring, boring, boring markets. Nothing. Look, we haven't even got one ADR today. Not one ADR. I don't think anything's even halfway to ADR, is it? Pound, probably. Pound pairs are the only ones that are halfway to ADR because of the CPI news this morning. Nothing else is anywhere near it, is it? Dead day.
Thanks for the follow.
I'm going to take FOMCs off in the future. Thanks for the follow, Mike. And the regs. I think I might have said the regs. No, I didn't say the regs. Welcome aboard. Hailey, have you done any testing around using RSI extensions to take profit, like H1 selling at 70 with market reversal on M5 and taking profits when H1 reaches 30? We had this very conversation this morning, Michael. Somebody else asked this morning. I can't remember who it was. But yeah, we had this exact conversation and why it's not advisable to use an exit strategy using an indicator. Look, yes, is actually, this is a good example. Look, pound odd. Yeah, entry, short. If you were using this level as an exit, you're still in it. Look, you got in there, you're getting out down here, right? You're still in it. You've missed your exit there, you've missed your exit there, you've missed your exit there. Now you're in drawdown on 2 positions, probably 3 positions. You can't use this. In a trend, if you're mean reverting a trend, you won't get the extensions to the downside. Look, there's one this is a, look, I don't know what that is. That's probably 29, isn't it? It's 30.7. You wouldn't have got under 30. That is 31.4. That is 29.2 there. So on this whole 3-week look view here, that was the only time we got extended below 30 on the RSI. So every short position you've ever taken over this period of time, like I had a short there, exit, short there, exit, short there, exit. RSI would never have got you out. Yeah, you can't do it. And this works for every indicator as well, especially oscillators. The stochastic you could do it with because the stochastic is very, very fast, and possibly CCI. But the RSI is this is the exact reason I use the RSI, is because it is more smooth and slower in reacting to market movement. So I'm waiting for strength to actually get, it takes a lot for the RSI to get to where it gets to, which is why we know that we've got that move coming. So in an uptrend where you are doing that all the time, if it's what I would call a stable uptrend where you've got big swings, which are all coming back to previous support resistance levels, this would work. If you're in a strong trend where you're getting more of a flag pattern break, yeah, and you don't get back to previous support, RSI won't have this move down because the strength of the flag is never as strong as the push, which is why you see propulsion gaps filling, and then a propulsion gap, fill, propulsion gap, fill. But you don't get the strength in this movement to the downside because the bullish move is too strong. Yeah, so it doesn't work. But somebody else asked that this morning, which was funny. And it's the same thing with reversal alerts. If you take a reversal alert long, get out on the next reversal alert. But sometimes you'll find you'll get in on a reversal alert, market will go sideways, and you'll get a reversal alert here to the downside because it's gone into a range, and you actually make a loss on the trade because you took that. And then it pushes down, comes up, and then it gets another reversal alert, which would have been profitable. Yeah, this is just triggering market structure alerts. It does not mean it's going to hold and do that or that. It's just telling you that the sellers have just taken control of the market. Are you interested in getting into a short trade? Yes or no? What's the conditions like? Any propulsion targets? Any resistance to the left? What about upside? What's the fundamentals? Yeah, just because this has gone orange and gone ping does not mean you get in. You need to look at the charts, analyze it. This is the most obvious condition to take, obviously, so that's why I take it. But so yeah, any system that uses indicators as an exit strategy tends to be curve fit. So if you look at a back test on any strategy, EA or indicator that uses an entry signal from an indicator and an exit signal from an indicator, you will usually find it's curve fit to those signals. And if you take that exact back test and put it over a different out of sample period of time, you'll get a totally different result and usually negative. Doesn't work. Love it. Salo, yes, definitely. FOMC this evening. Gold, you have to sell it. It's the gold is coming down probably 500 pips this afternoon. You'll make 500 pips out of it, gold, this afternoon if you sell it for FOMC. That's a definite. Brian's going to need another towel. Sell it. Sell gold. Sell gold. Sell it hard. This is not financial advice. I'm not a regulated financial advisor, but sell gold. Don't blame me if FOMC comes out at 4.75. Where can I get the different session? Oh, yes, I answered that one. The Magic 8 Ball predicts what the US dollar is going to dump hard today. Quite possibly. It did actually, didn't it? No, US dollar was going long, wasn't it? I can't remember. Let's do it again. This is US dollar. Without a doubt, long. Yes or no? I asked yes or no. All right. Let's ask it properly. Should I long gold on FOMC? You can't predict it. Obviously not a Forex trader, are you? It is decidedly so. Right, okay, yeah, there you go. So it is a long. Gold is a long on FOMC. Sorry, it's not a short, it's a long. It's a long. God, look at this, adverts. You can tell where I've been shopping for my wife's anniversary gifts. Whoops. Hope she doesn't come in. Turn it off. I get into massive trouble. Well, I won't. I'll just ruin it. How many screens am I using? 4. 1 48-inch, 2 28 inches on their sides, and a laptop. I'll show you my setup. I won't be able to find it now, actually. I tried to look for this the other day, and I couldn't find it. I'm sure it was in here. Phone pics. Yeah, I did. I've got a picture of it. It's in Telegram as well. My trading setup. God, there's so many files, and you can't search photos and videos, can you? That's really annoying. The fact that you can't search photos and videos. Oh, there it is. Here's my trading setup. I'll show you. Ready? Here we go. So I've got a 48-inch monitor. I've got two sideways 28s, and I've got a laptop here. And I've got flashing lights and cool stuff going on. I know I'm going to get done for copyright because that music is probably copyright. There you go. That's my trading setup. Were these ads 5 meters? No. 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 Not this time. Right, just got back. Can I ask your opinion on why WTI increases despite an increase in inventories? I don't know, Fwang. Oil is a bit of a mystery to me. So the oil inventories we've just had, probably better to look on Financial Juice. Support the spawn break, that's fine. 1.1 forecast negative. I've only been trading oil for 6 months or so, I would guess. I've come to the conclusion that these do not have an impact on direction. It moves where it wants to, when it wants to, and it uses the inventories as a catalyst. Yeah, so it moves on the inventories, but the direction isn't related to the inventory. So it's not supply demand. It's a supply demand driven instrument. So you would expect if the inventories go down, they will be able to charge more for it, wouldn't you? But that isn't the way it tends to work. So I've not paid any attention to it, and I think that is why you will find oil inventories are yellow news. Yeah, so the oil inventories come out as yellow because they don't actually have an impact. OPEC meetings have an impact on oil, but I don't think that's got anything to do with it, inventories. I've seen inventory figures being massively out and then just doesn't move the other way. So I would ignore it. Do you think it's heading down in the coming hour? What, gold? I don't know. Is now. I don't know. There's a 50-50 chance of it doing that or that before FOMC, isn't there? It could push up to there. I don't know. I can't tell you. I don't trade like that. It's not what I do. What I do is make money. I fill my P&L up with lots of green stuff, right? I don't do stupid 5-minute scalping. Doesn't work. If you stop doing it. Oh, we did get the bounce let out, the propulsion gap. There you go. So we are making a run. I can't see anywhere on the NASDAQ at all that we would run to before FOMC, to be honest. So we have open. Oh, yes, I can. Sorry, yes, I can. 129.02 is probably your target. Might get there, might not before FOMC. That would be your upside target if you're carrying on long on it, but be wary. Was it 129.02? 129.02. Look at how far we've come, right? There's the opening range. Break. Yeah, bear in mind we've put in all the volume. Do you reckon it can get there? Considering that's the only distance it can make on the open. It's highly unlikely it's even going to get up there, is it? I'd be more inclined to watch that this afternoon. Doesn't look like it's got the legs to me. So if I have a gold chain, you're telling me to sell it in 2 hours? Absolutely. Yep. Sell your gold. Bring out your dead. Sell your gold. I don't know. No idea. Thanks for answering my questions. Reference spot firms. I got sidetracked by work. Cool. Can you explain how did FOMC affect the market in the past? Oh, that's what we were going to do, wasn't it? This afternoon. I completely forgot. We were going to look at previous FOMCs. Now, actually, it's not FOMCs we need to look at. It's Fed fund rates. Yeah. So we've completely forgot about that. But yeah, it's 5 to 4 now. A bit late. So February the 1st was our last one, and then December the 14th. So if you look at, let's use Euro US dollar. February the 1st. There. And December the 14th, November the 2nd. December the 14th, November the 2nd. Was it November the 2nd? That doesn't look right. Oh, it was. Okay. Okay, so these are the previous FOMCs. So last one. Second of. Okay, so that was the last one here. So it was here, 6 Wednesday, there. Yeah. That's the 1st of February, is that right? Yeah, okay. So there's your last FOMC. All right, so that's your FOMC candle. Boom, straight up. And then we, boom, totally undid it. Yeah, so fake move. If you look at the rate that we got, it was 4.75. So that was an as forecast. We're 4.5, forecast 4.75, achieved 4.75. All of these are forecast achieved. Yeah, so the last three, which is, you know, it's very rare we don't get forecast, is it? It just doesn't happen very often. So that's your typical move. If you look at it on a lower time frame and drop down to like M5 on the 2nd, it's the 1st, isn't it, February?
Thanks for the follow.
Thanks for the follow, Dan and C-Sane. Sorry, I missed you. Yeah, so that's what we got on the move. So we are there. Yeah, so this is FOMC. This is the press conference. Yeah, so remember I said earlier, right? What moves the market is not the Fed fund rate. Yeah, it's the FOMC statement and the press conference. Yeah, so the market is factoring in this. So it's been factoring this in for weeks. The US dollar has been moving towards its target for the 5% interest rate. Yeah. So when we get that as expected, the market is like, oh, brilliant, thanks. Yeah, and you see that on the chart as usually a, oh, right. It's a blip because it's not unexpected. The market moves on unexpected news, right? So that's what you tend to get. Then what happens is you have the press conference, and during the press conference, the Fed will either rally or drop the market by saying what we anticipate happening in the next release is interest rates to rise because inflation is still coming up. Unemployment, however, has stabilized and GDP is increasing. Therefore, we have the tools to increase interest rates to get on top of the inflation rises further. Right, what does that mean? If interest rates go up, the US dollar becomes attractive, more money comes into it, therefore we get a rise. So what the market does when it hears from the Fed what they're anticipating doing in the future is it starts to buy. Or rather sell in this case. This was obviously not a hawkish statement because this went up, which means that the US dollar went down. Yeah. So this is what happens. This is the important bit, the press conference. So when you look at them, if we go back to the previous one, there, which is this one here, again, dropping down to M5, move forward a bit. Oh, crap, when was that? I've got to try and find it again now. 14th of December. There we go. Yeah. It's the 13th. 14th. There we go. So that's FOMC. Look at the size of that gap down. So we went vroom, gap down, wick, press conference. Yeah. So again, a totally different thing to what we had on the last one. However, the result was the same. We forecast 4.5, we got 4.5. So the last one went, let's have a little wick, and off we go. That one went, holy crap, jump down to there, go completely crazy for a bit, and then fly, right? So two totally different outcomes. November the 2nd. Is there. 23rd of November, really? Sorry, 2nd of November. Oh, I've got a data gap. 23rd of November back to the 4th of October. Can't show you that one. Got a data gap there for some reason. But my point is, if you were to look at that one as well, you will find something totally different. Yeah, so what happens during an FOMC release is not a predictable thing. Yeah, you can look at what happened on the last X number of them, but what you're going to find is what's going to happen this evening will have a different thing. It will either go bang, or it will go whip, or it will go not going to do anything, press conference, bang, or press conference. Oh, not really any guidance. Yeah, you can have any one of those three things happening. You could have the Fed coming out and saying, due to the current banking situation, we've decided to freeze rates at 4.75. The US dollar will collapse through the floor. Everything will fly against the US dollar. You could have them come out and say, due to the recent banking crisis and the fact that inflation is coming down at such a high rate, we've decided to have one more crack at it, 5.25, and we're never going to touch it again. US dollar is going to fly through the roof and everything's going to collapse against it. Yeah. In reality, you can't predict anything. There's no point in trying to trade the news. We got a 1.75 there on June the 15th, 2022. Look at that. You going to give that one to me? June the 15th, 2022. Where's that? That one there. Look at the size of that day. Boing. See? That was an interest rate change that wasn't expected. Yeah, we didn't, you got a huge move within inside that candle there. I'm better find that, am I? June. May. Look. What do you mean we're going up? You didn't say we were going up. Yeah, just total. And obviously this was bullish US dollar. Yeah. Euro US dollar went up, which means the US dollar went down. Yeah. Again, completely unpredictable result. If you were taking a pre-market breakout of that, though, you'd have made an absolute fortune. But then on the other two, you would have made an absolute loss. So there's no point in trying to trade the news or predict it, because it will go where it wants to go based on what the market needs to do. And the market will do what it needs to do based on its books. And if its books say, if we drive it short, we're going to make more money than if we drive it long, that is exactly what will happen. Yeah. So whether you decide to go long or short pre-market is fine. Just be prepared either to go into drawdown or to go into profit. Thanks for the follow, Ground. Welcome aboard. No iPad. No, I don't have an iPad. I used to have an iPad. Not an iPad. I used to have an Android tablet, but I decided to upgrade to a Microsoft Surface instead. Right. Need to juggle 3 8-balls. All goes down. Everything goes down. Yeah, it could well go down. Absolutely. Not everything can go down by pure definition. If the euro US dollar goes down, it means that the US dollar is going up, doesn't it? So everything can't go down. Everything will move in the opposite direction of the US dollar. That's the only thing you can guarantee. Whether it goes up or down is dependent on whether the US dollar crosses at the front or the back of the pair, doesn't it? If US dollar strengthens, that is not going to go down. However, that will. Who knows? Who cares? That's what it was. The P&L is going to look rosy or unrosy. Hopefully New Zealand dollar CAD will be banked by then. Pound yen will be banked by then. And everything else will be banked by then. I'm interested to see what happens to my hedging set file as well. Really interested. That will be an interesting one. See what happens with this. This is banked 8.5 grand since the 14th. In less than a week, we've got 8.6% return, 1% drawdown. So this set file is doing very, very well. However, look at the exposure on the US dollar. I've got 4 long and 2 short. So I can guarantee one thing. Going to have some drawdown in the morning. I know that's going to happen. We're also going to bank a grand. Another grand. We've already banked a grand this morning. But what about gold? Funagold, yes, definitely gold going down. Oh my God, what is everybody's obsession? It is. Funagold, have you just come from a Telegram group or a Discord channel that sent you a link to my YouTube to say, ask about gold? I'm just curious. I've never really experienced so much obsession with gold. Everybody wants to trade gold. I've no idea why it is. It is just, I don't know. I just don't get it. Don't get it. You've got so many other instruments that are so much more predictable and have a pure fundamental advantage and edge. And yet everybody wants to trade this crazy thing. I guess everybody's trying to make a lot of money, aren't they? That's why they trade it. It's just literally everybody wants to make a killing very fast and they want their Lamborghini, and gold is the way to get it. It's just, I don't know. There's no Forex. There's no courses out there that teach you to trade gold. There's courses out there teach you to trade indices. They teach you to trade Forex. They teach you to trade stocks. There's no courses out there that teach you go and focus on gold or silver or anything like that. As Tamo literally just said, I want to change things up. Let's talk about silver. Yeah, I don't get where it all comes from. I don't understand why people focus on it, because there is no education on it. So what do people do? Go out and get educated on something and try and apply it to a completely different instrument it's not designed for? This is what I don't get. I've been doing this for 15 years. I've bought a lot of courses, indicators and everything. None of them have been focused on gold. None of them. That's why I don't trade it. Hello, what's going to happen to gold? Ryan. I don't know. I don't know where it comes from. This has come from a broker. That's Udemy. Live trades on gold. Simple strategy to double your account. Well, that's obviously a Lambo person. If they're trying to double an account, they're gambling. Ultimate gold trading. Gold trading for beginners. How to build your gold trading. Capital.com. That's a broker. Yeah. Everyone teaching you to trade gold is a broker. Why do you think they're teaching you to trade gold? Everybody loses on it. What do brokers need you to do? If you're trading on a broker's B book, what do they want you to do? Lose. Why? Because they're taking the other side of your trade. It makes total sense. I understand now. The brokers are teaching you how to trade it, aren't they? It's an investment vehicle. It's not a trading vehicle. I don't know why people get so obsessed with it. It's crazy. There's no courses on it though. Look. I've typed that in, you get nothing specific. Type that in. Yeah. You're going to get a load of people specializing in Forex courses. Guerrilla trading. Udemy, that's another Udemy. Admiral, it's another broker. Baby Pips. Ta-da! Best trading course you'll ever do when you're a beginner. What's its focus on? Forex. Why? Because gold's a nightmare. Learn to trade. Forex. That's Greg Secker. Reed. That's a recruitment agency. London Trading Academy. Forex. Tickmill, another broker. Yeah, a lot of people teach you to trade stuff that is actually tradable. But hey, who am I to judge? ECB officials claim vindication on rate hikes. Pop. Where's the news? There it is. Officials claim vindication on rate hikes amid price risks. Don't know what that means. Anywho, I'm going to shoot off in a sec because the markets are absolutely dead and we're just waiting for FOMC, and there's no point in me sitting here just talking we're not actually talking about education or anything either. So we'll do that tomorrow. Most other YouTube content creators tend to focus on gold, hence why they go from there and come asking about gold. I don't believe that's true, Sam. Most of the YouTubers that I watch are focusing on the futures market, index scalping, or individual FX pairs. Or, like me, they are a generalist and trade all FX pairs. I haven't seen that many channels that purely trade gold, especially not live. But then again, I'm live all the time, so I wouldn't be watching them, would I? Because I'm in here. But yeah. They watch Gold Rush in Discovery. Yeah, probably. Let's try one time. Gold. Leo's desperate. Look. Buy it, Leo. Definitely sell it. Definitely sell it. But buy it when you sell it. And then once you've bought it, sell it again. And then once you've sold it, make sure you buy it back. Otherwise, you won't be able to get out your positions. Michael, therefore, the strategy you trade, your TP, is a quarter or half an ADR. Yes. Everything I do is focused around extracting a quarter to a half an ADR out of the market. Or 0.5%. Which is what, coming back to what we were talking about earlier, yeah? My focus, 0.5% a day is 10% a month. So if you can bank 0.5% a day, you're going to make 10% a month. You can bank 1% a day, you're going to make 20% a month. And so on and so forth. If you can do more than that, well done. You're better than me. On a single strategy, obviously. 3 strategies. But yeah, so if you focus on 0.5% gain per instrument that you can get there, or 0.25%, and do it twice a day, you're done. If you focus on a quarter to a half an ADR, you know that there's a much bigger chance of you hitting that target. Price moves a quarter to a half an ADR on a very regular basis. Often it will move 1 ADR 42% of the time. So if you can keep within an ADR, you only need... The reason the target is there for 1/4 of an ADR is it makes sense if I show you it. Let's take Euro New Zealand. Yeah, so where we are now on Euro New Zealand, my average is here at 173.348. Yeah, and ADR is there. Let's do it on the hourly chart so you can actually see without the moving averages. Yeah, so ADR is there and there. And there's my average, right? So for price to move a 1/4 of an ADR, it's got to move that far. To move half an ADR, it's got to move roughly that far. Yeah, so whenever I get into a trade, it's very achievable to do that. Look, it did it there, did it there, did it there, did it up and down there, did it there, did it, probably didn't do it there, did it there, done it there. Every day we will get between a 1/4 to a half an ADR movement out of price. So if you can use a target of those, virtually every day you'll hit it. Look, in, out the next day, in, out same day. In, 1, 2, 3, 4, 5 days, out. But why did I get out 5 days? Because look at what it did for 3 of those days. Didn't move. That's the only reason I didn't get out the trade. It didn't move half an ADR. in any direction. It just sat sideways. Then we pushed up, then we moved an ADR. In, out next day, ADR. Yeah, so that's why I use a quarter to a half an ADR target. And everybody's like, yeah, but you missed all of that. On that trade, I missed all of that. On that trade, I missed all of that. Yeah, I did. But on the days where you're getting chopped to pieces, I'm getting in and out and banking $1,000. Because I'm taking half an ADR out of that, and that. Or a quarter of an ADR out of those four and making up $1,000. Keep your targets small. In, out, done. You'll always be able to bank regularly. Build this up because someday you're going to need this because one day this is going to go bad. You're going to need to use some of that to get rid of that. If you can't build this, you can't do drawdown control. If you can't do drawdown control, you're going to struggle. Hopefully you don't need it very often, but when you do need it, we're just about to TP on that DAX short, if you got it. Nasdaq's come back down again as well. Look. Do you know what I mean? It's just not going anywhere. It's too scared of FOMC. If closing one position of a basket manually, does this confuse the EA's calculations? No. Depends which one you close. It shouldn't. Welcome aboard day one. Sorry, I didn't see you there 11 minutes ago. It shouldn't. 101th like? That's not a number, 101th. 101st. God, I'm a school teacher. I'm not really. If I'm closing one position, yeah. So it shouldn't. The EA will auto adjust on candle close. So it will also restore your last open position. So it depends which you close. If you're getting to the point, I would say though, Yarp, if you're getting to the point where you are having to intervene with this and close out positions manually, or you want to close out positions manually, I would say at that point, that's when you're taking over. Yeah. So pound CAD, right? I've got 4 on that at the moment. It's sitting in 1.27. It's not the end of the world. I'm still letting the EA control it for me. If I step in here now and do an aggressive drawdown control position, I will manually take this over. So in my head, I am now manually trading this. If I start to do aggressive drawdown control, let's say, for example, this was my aggressive position. So it would have been, it's not big enough. It's not big enough to do one. But let's say, for example, I've taken a 0.75 here. It's an aggressive DD control position. Average has jumped up. We push down to average. I close that out manually, and I do a manual drawdown control on that, and I take 0.3 off of that, right? The EA is still running these two positions, that one and this partial. The latest entry will be here, so it will take another entry up there for you and get you into that short to get another profit out of it. But I am on this myself now, so what I will probably do is wait for this to get back down to break even, wherever it may be between these two positions, and close it out manually myself rather than let the EA manage it. Because I've already made a profit, haven't I? I've made a big profit on this drop. I've used 50 to 70% of this to take off that position and some of that. So when this one gets to break even, I'll probably go, yeah, had it. Thanks very much. That's the profit. This may well carry on, but I don't really want to take the chance because it got a little bit out of hand. Don't forget, I've already taken a $700 loss on it. So if it gets down to like $900 in profit, I'll take the 200 and walk away. But if you're starting to manually adjust your positions, it means something's gone wrong. And usually it's a case of it's squeezing. This isn't a massive squeeze though. I mean, this is 4 positions. If we get weak US dollar, this is going to go into more drawdown. in which case then it will scale out of more. And then I will do aggressive drawdown control positions on it. But if the US dollar strengthens or we get a whipsaw, there's every opportunity this is just going to get me out at 200 ADR later this afternoon, isn't it? So, but I don't know. It's, again, it's a personal thing, but try not to muck about with it. Just let it do its thing. As an experienced trader, what do you do when you experience a bad week and continuous losses? Mentally wise, just get on with it. Every single day is a new day. People that have been in here a long time, they've seen me take loss after loss after loss and then bank 12% the next day. That was a one-off. But yeah, you're going to take losses. Yeah, you're going to take losses every now and again. And some days they will be 1,000. And it's usually on news events like this where it goes crazy that you'll end up taking some losses. And those days you just have to deal with them. Tomorrow is a different day. Yeah. The market has moved up. It squeezed you. You've taken some losses. What's it going to do the next day? Possibly that. So if you're short, and have just had drawdown control done to a tune of minus $700, when that thing comes down and makes you $1,100 tomorrow, are you going to be thinking about that? No, it's done. It's in there. It's shut. That's yesterday. Yesterday was a $170 loss. Today is a $1,346 profit, and we're sitting in $500 of drawdown. Yeah, this is done. That's the mindset you have to have. Yeah, especially when you're doing things like trading NASDAQ. If you're scalping, yeah, people ask me all the time about in here virtually every day I get, can you look at, that's what I get. Can you look at? Yes, I can. I can look at anything. Can you look at the NASDAQ? Yep, there you go. Where's it going today? What has that got to do with this? What has that got to do with that? Nothing. Yeah, that was yesterday. Why do you think yesterday's candle is going to have a bearing on whether that goes bullish or bearish at the open? Nothing to do with it. There's your opening range, right? Where this goes today, it goes today. Where it ends today, it ends today. But what happened yesterday has nothing to do with the way that that is going to move today. If the pound rallies for 3 days solid, it doesn't mean it's coming down. Why would you go, oh, we're going to sell it because it's had 3 days rally? Why can't it do 4 or 5? Look in history. Yeah. There's a thing called a 3-day rally in the stock market. 3 days up, pull back. 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 5 days up. 7 days up. Get the point? Yeah? What happens then and what you think is happening because something's done something in the past does not affect the future. We haven't got one of these. Yeah? So you just can't, forget yesterday. If you made a loss yesterday, right? The opening range breakout has 2 losing days on the trot and loses $5,000. On day 3, you get an opening range breakout like this. Pop. Let's look at a massive ORB. Let's find an ORB that is out of the scale. Look at that. Look at that. Yeah. So we had a choppy open, lost 2.5 grand. Made 4. We had a choppy open, lost 2.5 grand. NASDAQ made 7. Yeah. What's happened in the last session has nothing to do with the next session. Yeah. Doesn't matter, does it? So you've got to be able to just pop that aside and go, oh, well, I had a bad one. Why do you think all the prop firms have a daily drawdown limit? Because what they want you to do is stop trading, walk away and go, Jesus, that was crap. Learn from it. Come back tomorrow and go, don't want to do that, you think I did yesterday because it didn't work. Yeah, it's all to do with just resetting, reset. You have to reset. Do you think I come in and, again, do you think I come into the morning and go, ha, made 3.5 grand, made 3 grand or something, and then the next day you go, I'm going to make 3 grand, you make 250. Oh, you get what the market gives you. The market moves up and down, right? Today, the market hasn't moved very far. Yeah, on the 16th, it moved like that. So you get what the market gives you when the market gives it to you. You cannot dictate what will happen on a daily basis. So stop trying to do it and just get on with trading the day, the strategy, the system that you're using. Yeah. And I've had days like this many times where I have a positions on and I'm sitting there in 15% of drawdown, right? And I haven't banked anything today, and I banked $200 yesterday, and I'm sitting there thinking, come on. And I know, because I've been through it many times, that all of a sudden that is going to pop into the P&L. But you can't look at these days where you've had a 0 and a 250 and go, I can't pay the mortgage, because this day, which is 4.5 grand, is paying you mortgage. Forget that yesterday. And if you don't want to see yesterday, don't use this. Little tip. If you don't want to see this because it makes you go tilt, put a naught on the end of that, and it's gone. Concentrate on this. Focus on what needs to be focused on. Forget everything else. Let it deal with itself. This will all happen. This all goes over there at some point. This is what you need to focus on. Are you worried about that? No? Fine. Go off and walk the dog. Come back after lunch. Are you worried about that now? No? Brilliant. Go off. Go and take the wife out for dinner. Play with the kids. Come back in the evening. Are you worried about that? No? Fine. Go off. Have you touched your indicators? Have you touched the market today? No, the EA's done it all for you. Yeah. This P&L down here is nothing to do with what you need to focus on. The system, the strategy, the entry, the exit, the drawdown control, whatever you're doing in trading, it's got to be done based on what is happening right this second. That's how you deal with it. You have to do it that way. There isn't another way. If you're dwelling on the past, it makes you cross, doesn't it? Going back to the bootcamp, just quickly, because it's an important point. Y toro. I am a Spanish broker. I use bulls. Going back to this. Yeah, all of this stuff here makes you cross. Yeah. If that's a negative, and that's a negative, and that's a negative, that also makes you cross. Yeah. We can deal with all of this. We know how to stop this. We know we can get rid of it all by not trying to time our trades. This is the bit that you will not be able to deal with any system or strategy. This is the only psychological part that you can't deal with, losses. And you're going to have to lose them. But you can make money by losing money. You can have losing days and losing positions, which will turn positive. And it's all about controlling your P&L. So that's all the advice I can really give on it, is just don't focus on it. And if you have the Trade Manager dash, move this out of the way, get rid of it, and focus on this. That's all that's important, isn't it? Thanks for the follow, Raul and Uganda. And Dung. Dung Tran. I'm assuming you're maybe Oriental of origin, and that is where that name comes from. Because in the UK, it comes out the back of a cow or a horse. Dung. Sorry, that was rude, wasn't it? Welcome aboard. Welcome to the stream. I comment on everybody's name that comes in here, so I'm not picking on you. I'm not focusing on you and singling you out. Just what I do, which you will learn. Right, I'm just going to finish up on the chat and then I've got to disappear. Don't go to the spin class. Stick around until FOMC. I can't. I've got to go. I'm going out with the wife. It's our date night. Going to exercise classes. How good are we? When you've been married for 15 years, that's what date night is. Going to an exercise class together. Bought your EA and everything that goes with it. Also downloaded the presets for my back testing. Is only taking longs and not shorts. Can you please show your testing configs? Well, they are the EA set files. Only taking longs and not shorts. We'll make sure that the conditions are met. Mutsi, rather. Send your set file in Telegram, and I will look at your set file. Another thing to do with EA is just make sure that you've got your EA set to longs and shorts. Yeah, in the EA, in the common tab, you've got allow live trading. You've got long and short. Make sure that's set to long and short. And also in your inputs, make sure that is trade direction is set to both signals, not long signals, short signals, both signals. That's the only thing I can really recommend on that. Nice stream. First time here. Are you daily? Yeah, twice daily. It's on the website. I'm on the page. There you go. Live room. Basically, I'm here for Frankfurt Open and New York Open. And I have about an hour in between where I go and do nothing because I don't have time. I just relax and then go, right, back to it. Sorry for being so stupid. What does ADR stand for? Average daily range. Oh, Tarmo's just answered that one. There you go. Dilip. When do you decide to take? So when do you decide to take a quarter or half? Up to you. What do you fancy? Personal preference. Quarter's easier to reach than a half. But a half is also easily achievable. There's no answer to that. That's personal preference, Michael, really. I use different ones in different set files. H4, I posted the set files that I'm actually using at the moment in the Telegram group. I can't remember which way they're set up. I think one is set for a quarter and one is set for a half. That's why I stick to one time frame and trade breakouts. I don't know what that question was. How much is your trade? Oh, Leo, hello. So I thought your name was Lee. I got excited then. How much your trading equity? What's the minimum capital? My trading equity is 30k on my personal accounts. On your funded accounts, it's whatever you buy, basically. There is no minimum really, but if you're going to position trade, you're going to need at least 3 to 5k as a starting capital. You can do it with less and over leverage. So really, you can trade with anything you want. The drawdown you'll experience and the pain that you will go through will be directly related to what you put in as your balance percentage risk. So the riskier strategies like ADR reversals, I use a smaller risk. On the more stable strategies like H4 mean reversion, I will use anything up to 0.5% risk per trade. But on this particular strategy, on H1, for example, this has made 35, it's made 22% this month. Yeah. If you'd have been using 0.4 instead of 0.2, you'd have made 45% increase on your account. So if you want to compound, and well, not compound, but if you want to double your account fast, you can do it with any capital. But the risk is a lot higher, obviously, isn't it? More danger and more risk of ruin. Your risk of ruin. The more risk you use on each individual trade, your risk of ruin is increased exponentially. Yeah. So it's taught in the bootcamp 0.01 per $1,000 in your account. So if you're trading a $5,000 account, I would recommend starting with a 0.05 lot size. But if you're using the EA will auto-calculate everything for you and you don't have to worry about it. You just put in how much percentage risk you're willing to use. Been on for a while now. Are you staying for the news? No, I'm not. I'm going spinning. I'm not going spinning tonight. I'm going to body conditioning. It's a new class. I've no idea what it is. It's probably going to be very embarrassing. What do I think about gold? I love it. It's great for making necklaces. Gold's price depends on what silver does. That's so true. It is, isn't it? Right, I'm off. I'll be back tomorrow morning at 7:50. I will be in the Telegram group. I'm always in the Telegram group. So you can always come in the Telegram group and annoy me in there. And obviously we'll see what happens this evening. So 6 o'clock, Fed Fund rate, 6:30, press conference, 7 o'clock, all hell breaks loose. Somewhere between 6:30 and 7:30, all hell breaks loose. Or we just get a flat line. Obviously, we don't know, do we? So, but be aware, the high probability of some crazy action this afternoon. So, or this evening. All right, so we're back at 7:50 tomorrow morning for the Frankfurt session. And I'll be back obviously at 1:20 tomorrow afternoon if you need for the New York 2. Okay, have a good one. Good luck in FOMC if you've got positions on. And if you're trading it, super good luck. You're going to need it. All right, have a good one. I'll be back tomorrow. Catch you then.